Okay, welcome Portfolio Builder members to our September 1st live trading webinar. Big news overnight is the dollar continues to tank. Cash is trash. You want to own the right assets. So we have our investors loaded up in the S&P 500 and a dash of silver, which are both doing remarkably well. We just closed out the best return we've ever had in 3 years. Last month and are starting off this month with a good kickstart. So we'll cover this and more. This is a demonstration of the account that's had every trade. It has slightly different results than our track record just because of live fill time. So everybody will get slightly different results based on when you begin following. But you can see this $100,000 account has grown nicely to $143,484 as of this webinar. And so much of the profit on this has been in precious metals and the S&P 500. And so we've recently switched from gold to silver, expecting a melt up. So real quickly, let's take a look at the P&L per month, and then we'll go into how to follow the trading plan and what's guiding our trading decisions. So there you have it, 9.07% return in August. This is the best we've ever had. This is our extremely simple, no options, buy and hold, very passive track record. It does it primarily using the risk parity strategy, which is extremely safe. We'll show you what that is. Ray Dalio made that famous, but currently we are using a highly optimized version of the risk parity strategy. So with that said, also, we did have much less drawdown in March. If you were quite nervous in March, you should have been. The entire financial system was on the verge of collapse. If the Fed had not done something extraordinary, unordinary with the $3.5 trillion of stimulus, we would be sitting in a much nastier America today. So again, we only had 6% drawdown in March, while most investors had 30 to 40% drawdown. So that's how the risk parity strategy protects your capital. In a moment, Dean will be taking over the screen and demonstrating how to follow the trading plan immediately, starting today. But I will just quickly highlight that we've done most of the profits with 25% of your capital actually in cash, ready to hedge when we look for volatility ahead. Right now, we're predicting the S&P 500 does march higher, and that there's only a few things that can get in its way. We'll cover what those are and how to adjust the portfolio if they actually come to life as a real problem. So right now, for every $1,000 following the program, you buy 10 shares of UPRO. That's the 3-time leveraged S&P 500 product, and then 5 shares of SLV. And so let me quickly show you what this strategy is all about and how to follow it. So first of all, here's a look at the dollar. If you have money on the sidelines, watch out below. Your buying power, your purchasing power is falling off a cliff. It's down 10% since March. So that's quite remarkable. So again, if you were exporting goods to other countries, this would be favorable. But if you are really doing anything else, your money is quickly losing value. So this is good for stocks. It's good for precious metals. And until this trend continues to reverse, look out below. You could see some pretty serious volatility in your purchasing power in the days and weeks ahead. Now, this is a breakdown of the S&P 500. And so you can see this is the new risk parity strategy. It has technology as your safe haven asset. And then you have your banks, industrials, and energy companies down below, greatly underperforming. So this is what we're expecting, is for this huge breadth to consolidate and to push into new highs. So critical for this are rising interest rates on US Treasuries, which again is one of our specialties, is predicting interest rates in the largest market that has real money behind it, which is again US debt products. So our main prediction going into the election and into next year is currently a Trump victory, a reopening of the economy, and a major rebalancing out of these really fearful positions in technology stocks, and loading up on the beaten up portions of the S&P 500. So that's the strategy. Now we do have two products. In the afternoon, we have a more lengthy webinar with about 2 hours of content from me. And we're currently protecting this UPRO position with put options on banks. So that's a good way to add extra security if you do have a large portfolio and you're less interested in total return and you're more interested in the safety of your return. Okay, so that's the bottom line. If we break this down, you can see that the banks and energy companies are really trailing the tech. And the main prediction we have is that this will consolidate in the next 12 months and drive the S&P 500 dramatically higher. Now, this is the risk parity strategy summarized and how we've really played the markets for most of the last 3 years to have such a nice return. And so let me just zoom in on this so you can see it. It's very easy to understand when you look. When you look at the treasury market, the TLT against the SPY in the 2008-2009 housing bubble, which turned into a crisis. And so what's important is if you had half your cash in treasuries and half your cash in the S&P 500, the 2009 crash didn't really put a dent on your portfolio. You broke even. And then if you held those treasuries, you had this protection against downside risk the entire time. But what's important is even though the treasuries provide this huge downside protection to your main asset, the S&P 500, you didn't lose money in treasuries along the way. You can see over the same period, treasuries are still up 76%. Well, the S&P 500 is up 176%. And that was the ultimate way to protect downside risks and hedge against volatility. Now, this is what's happened. And we're calling this the nuclear winter for the risk parity strategy. And it's really easy to see. So in the March crash, we were seeing this risk parity strategy work. TLT went up as the SPY went down. But at this moment in time, because so many markets worldwide were crashing at the same time from the global shutdown, we actually saw the US Treasury market snap. It stopped doing its job and forced the Fed to do something it's never done: rate cuts and quantitative easing back to back without a real solution. So now we're living in la la land with trillions of dollars slushing around these banks. And as you've seen, we are truly in bubble territory, which is very good for stock investors. But for most money managers who do the risk parity strategy, they're now facing a broken system. The treasuries should have sold off dramatically as the S&P 500 rose, but they didn't because the Fed had to suppress those interest rates. And so now trying to have that 50-50 strategy is not necessarily a smart idea. Our prediction right now is that the treasuries are about to fall off a cliff and that capital is going to reallocate into the S&P 500. So we're starting to see this. The Fed has signaled that they are going to stand back and let this happen, that they're not going to do yield curve control right now. They're not going to ramp up quantitative easing. So our baseline prediction here is a Trump victory, a rotation into some of the beaten parts of the economy, a massive sell-off into treasuries, which can result in trillions of dollars flooding into the S&P 500. Not to mention investors have more cash on the sideline today than ever before in the last 50 years. So the potential for a S&P 500 melt up is really in the cards. There's really just one item that we really want to see by the end of September that could derail this prediction, and that is stimulus. We must continue to pass stimulus because primarily Democratic mayors and governors refuse to reopen their cities and states. They say it's for health, but we all know it's a political agenda heading into the election. So that is the single greatest worry I have for our clients, is the lack of stimulus. So what's the deal with stimulus right now? They're arguing over about $1 trillion of stimulus. And funny enough, the stock market's actually rewarding investors who take that risk right now, because the longer we wait, we all know what's going to happen. the bigger the price tag of that stimulus. So we've gone from $3.5 trillion from Nancy to $1 trillion from McConnell, and it's gone back and forth. The Republicans are up to 1.3 trillion in offering, and Nancy's down to 2.5. I'm going to bet they meet somewhere in the middle from there, and we're going to have another massive flood of money pushed into the economy. So that's the single risk I see right now for our clients. And again, at this point in time, you're simply being rewarded to wait for it, because the longer this takes, the greater the stimulus will be. So that's the key prediction at this time. Now we have a few good leading indicators that can give us a heads up of trouble ahead. And so one of these is a cryptocurrency called Ethereum, and it is skyrocketing up. Just look at that. Ethereum was able to predict the March crash way before it occurred, and it predicted the April run up way before the NASDAQ recovered. Right now, it is pointing straight up. Now, a lot of this is due to the dollar weakness, so I'm not going to say predicting markets as simple as this. But the big players who have inside knowledge, they trade Ethereum as though it's a technology stock, and they dump it the second they think there's trouble ahead, because it's a very low liquid product with huge gains to lock in. So right now, one of our favorite leading indicators is not just pointing up, it's skyrocketing up. Now, this is a better indicator for technology stocks, which we'll take a look at a few today, like Apple, Tesla, and Zoom, just to name a few. Now, here's the next chart I want to bring to your attention. And again, in the black, we have the black money, the cryptocurrency. In yellow, we have the S&P 500. In the green and red line, we have the NASDAQ. And then in yellow and blue, we have the SPY in yellow and the TLT, the Treasury market, in blue. And so our big prediction is, once again, that as the blue line sells off, and why will it sell off? Well, we're trying to sell $5 trillion of debt in the next year. And the Fed's only going to buy a small fraction of that. So that's going to force interest rates to rise, and again, pump money into new assets. So that's the correlation we're looking at. Blue line should sell off, and yellow line should start to catch up with the NASDAQ. And I think the main catalyst that'll really supercharge this will be, again, once we pass stimulus, which I do believe can happen by the end of September. Here's a more zoomed in look at the same chart, but I've added in a green line. That's the value of the dollar, and the dollar is losing value. So this is not good. If you have money in cash or the dollar, you should be concerned. You're losing purchasing power at the fastest pace since 2018, when we had that massive stock rally and the dollar was falling off a cliff. So I do expect that exact same scenario to play out in the coming months. Now, interesting enough, the gold market's now highly correlated to the Treasury market. And that's because real interest rates have gone negative. On the 10-year Treasury, you make about 0.6%, but the PCE is 1.6. So you're basically agreeing to lose 1% a year to hold Treasuries and lend money to the US government. That's not going to work out now, is it? So those interest rates must go up to make Treasuries attractive. And as they become a positive real return, I do expect that to create a lot of downside risk in precious metals. So we're not there yet. But again, you can see when the TLT had a sell-off right here, it created a vicious sell-off in precious metals. And so we're continuing to see the weakness in US Treasuries. Throw in a $2.5 trillion stimulus bill, and it's going to make the TLT really crash hard, which is good. We want to buy the TLT at a discount once it's fairly priced and attractive to investors. So we'll be right back to that risk parity strategy, but probably not for the next 3 to 6 months, assuming we do pass a stimulus deal. And I think this will essentially push the S&P 500 up a good 15 to 30% from here. With UPRO, that means you're sitting on potential 45 to 120% return from here. So it's going to be a fun ride. We know what to look out for risks, and we also know how to hedge against downside turbulence into the election. Now, this is one of our favorite indicators. It's the gold to copper ratio. When we're building things, copper goes up at a faster pace than gold. And so typically during a crisis, you start to see a bid for both of these assets as we're trying to understand, are we really fighting debasement of currency when you'd want to buy gold, or are we fighting inflation? Thus, you'd want to be owning commodities like copper. So what has Buffett done in the last month? He's put $30 billion into commodities, whether it's natural gases, precious metals, mostly different mining companies. So he is predicting lots of inflation ahead. And so are we with our positioning. So right now, copper is outperforming gold since the March crash, which is exactly what we'd expect during a period of QE. And thus, we're predicting falling prices on treasuries, rising interest rates, which again is very good for the S&P 500. Now, this is called the yield curve. And again, if you really like what you're learning today, we have a much more detailed webinar every evening. But here is the yield curve month over month, the green month over the current month. And you can see interest rates are rising across the entire yield curve. And the Fed has basically told us they're going to sit back and allow this to happen with their most recent speech from the Jackson Hole as well as the FOMC minutes a week ago. Now, this is the auctions. So this is the debt we're selling. One issue is the Fed can't buy debt if we're not spending it. So it's really important that Congress continues to spend money to stimulate the economy until we do get everything reopened, which is tough because if we do give Nancy her $2.5 trillion, she's going to give $1 trillion of that to states, which are planning to basically stay locked down indefinitely. They have no plans to reopen at all. So we're primarily looking at California, New York, places like that. So $60 billion is not a lot to sell. We're typically seeing the government sell $150 to $300 billion a week, and the Fed's only buying 20 billion of that. So this is not enough to upset the Treasury market, and I would expect to see this ramp up. This is one of the lighter weeks we've had thus far. Now in this table, the Federal Reserve tells us QE ahead of time. So if they were to reduce QE, we would want to get out of Dodge. We would not want to own stocks if the QE comes to an end while we know the economy's not recovered and we're not getting all the stimulus passed. But the Fed has told us that most likely this won't change course for the foreseeable future. So we are expecting to see 80 billion a month here on out, which is perfect for the S&P 500. It's perfect to create a sell-off in treasuries. Now, if they were to aggressively ramp that up, we'd actually want to get more aggressive in precious metals. And if they were to ramp this down, we'd want to jump into treasuries at $80 billion a month. I'm perfectly happy where we're at. Repo markets is another form of quantitative easing. It's a little sneakier. This is what they did last year, if you remember, and they kept saying, it's not QE, it's not QE. This really tells us when the US banking system or the primary dealers run out of cash. They send their treasuries over to the Fed for a dollar loan. And again, we're seeing zero usage of repo. So there's no shortage of dollars in the banking system, which is another key element. Okay, the Fed's going to keep interest rates at zero for the next half decade, just like they did in the 2008 crash. So once again, this is as easy as it gets for monetary policy. We've got low interest rates plus QE. That is rocket fuel for the S&P 500. Here is the inflation rate. This is where precious metals can get in trouble, would be if the interest rates on treasuries rise faster than inflation. That is not good for precious metals. And think about it, if we're going to keep the country locked down for no good reason and sit there and print money and then allow the treasury market to sell off, there's a good chance that the yield on a treasury can rise faster than inflation, because we're not going to get a lot of inflation if everybody's unemployed and worried about their future. So that's the bottom line, is I do see risks in the precious metals if you're too aggressive. That's why we have a small silver position. and we're watching the interest rates on treasuries and the inflation rate like a hawk. The second that goes negative, we're seeing extreme volatility in precious metals. Now, the risk of this easy monetary policy is runaway inflation, which we saw in the 70s. And I do think that's in store for us, but probably a story for next year. We really got to get the economy reopened, get people back into their jobs for all this inflation to really push precious metals much higher. So we're looking for that opportunity. But at this point, we're still fighting deflation because no one has a job. Okay, here's the UPRO chart. This is our favorite way to play the markets currently. And again, if you do upgrade to our pro strategy, we're throwing in a put option in the banking sector, extra protection. If you're in our buy and hold portfolio, currently the SLV is the best bet for a hedge in these current non-risky conditions. Here's a look at silver. The chart that everybody's got their eye on is that same chart in 2010 and 11, which ran up silver as long as QE persisted. Right now, we probably have a good 1 to 2 year runway of more quantitative easing. Here is Freeport-McMoRan. This is essentially the largest copper producer in the world based out of Phoenix, but again, they're serving primarily China. So this is very critical. If we want to predict that we're going to have a crash in treasuries, we would love to see Freeport-McMoRan flying higher on strong copper prices. So there you go. It is rocketing up. We did play this for quite some time, but now we have our capital in a safer investment, UPRO. Now, Moderna, you may have picked up in one of our ads. We rode this all the way up to this high level here and then got out of Dodge. Mainly because it looks like Dr. Fauci has been fired. Now Dr. Atlas is in control, and Bill Gates stopped mentioning Moderna. So keep in mind with the SPY, we have all of these huge drug companies, specifically Johnson & Johnson. And so we have lots of exposure to headlines that are related to vaccines. We're keeping a close eye on Moderna, but they are just getting attacked from all angles currently. Now, TMF is the 3-time leveraged 20-year treasury product. Most of the time, we like to have half our cash in UPRO and half our cash in TMF, and it creates that perfect risk parity. But right now, I am highly concerned that treasuries could fall off a cliff for approximately a 15 to 30% rise in interest rates, and that could unleash several $1 trillion into the S&P 500. So we're just sitting back, watching for that to happen. My bet is the next multi-trillion-dollar stimulus deal does the job. It will essentially signal that there's not enough demand for the debt that the US is putting out there, and thus we must get higher interest rates. Now, when the time comes, when we have enough leading indicators to signal trouble ahead, the easiest way for us to hedge UPRO will be UVXY. So this doesn't require any options. And as you can see in March, it went from a value of 10 to as high as 140. So a small 5 to 10% position in this at the right time, which is not now, is a great way to add confidence and downside protection to remain long UPRO in and out of volatility. So the biggest risk really is that we may have to create a stock crash for Congress to get their act together and pass stimulus. Now, in San Francisco, for example, and in the Bay Area, where Nancy Pelosi resides, they have food lines that are getting longer by the day. So there is a lot of pressure to pass some stimulus. So I'm not convinced yet that we won't get a stimulus deal in September. And right now, we're actually being rewarded for not having a stimulus deal because the market's predicting it'll get larger by the day. Now, another great leading indicator is watching the US against the Chinese currency. When this is going higher, typically shows insiders know we're about to get aggressive with China, and that's very bad for stocks. Right now, the opposite, we're showing strength in the Chinese currency. So again, no risk ahead there. The Hong Kong peg does show weakness in Asia. If Asia was doing really well, we would actually expect to see the Hong Kong peg weakening, as people pick up local currencies. This shows people are scared and trying to protect the value of their currency. Now, Wells Fargo is the most at-risk US bank. If this were to go below the 22 level, I'd be concerned of systemic risk to the entire financial system. They have the most exposure to commercial real estate, plus the most exposure to residential real estate. And so right now, people aren't paying their rent. And that's a big problem. We must reopen the economy to save this bank. And again, that is what I expect to happen in the coming months. Hsbc Bank is the riskiest bank in the planet right now. It has exposure to Hong Kong. And so this is concerning. It is at 2009 levels and pointing rather aggressively lower currently. If this were to break below 20, I would start to predict systemic risk in the financial system and look at ways to help protect us further. So right now it's hanging in there, but this is by far the most alarming chart in the world, which is Hsbc Bank. They have massive exposure to gold, as well as they're short gold and they're long Hong Kong real estate. So again, that's a very risky predicament in these conditions. Deutsche Bank is showing strength. So China is signaling a complete rebound. And we can see this from the German bank, the Deutsche Bank. So Germany is tied to the hip of China. And for us to predict rising interest rates, growth, demand for commodities like copper, then we really want to see Deutsche Bank doing well. So it is doing extremely well. It's nearly doubled from the March low. So this does add confidence toward positioning. And here's the bottom line. When you do QE, unless you have a catastrophe, interest rates rise. It's really that simple. So look at the interest rates rising in 2008 into 2010. What caused that? QE, quantitative easing, essentially pumps stocks up and it puts pressures on treasuries. So as long as we're doing QE, unless we think there's an absolute calamity dead ahead, we want to be short treasuries and long stocks. And so that's how we are positioned. Now in our boot camp, we do have a put option betting on a crash in treasuries. So that is another options trade. To make this product very simple, we simply do not trade options. Okay, so that's very good. Another thing that you would get in the evening update is all the top news. So I am a huge studier of politics, lots of news, economics, the geopolitical tensions between US and China. So we would spend extra time in our evening episode covering that. So with that said, I will bring the mic back to Mr. Dean Gallagher to demo how to build out this portfolio A to Z right now.
All right. Thank you, Jason. Appreciate that. Very nice. And team, any questions so far on the materials covered? I know Jason covered a lot in a short amount of time. So if you did have a question, please do feel free to go ahead and raise your hand. And to raise your hand, simply type or simply grab that that gray bar at the bottom of your Zoom technology. Okay, raise your hand. We will address that question here live. And if you are listening to the live stream too outside of Zoom, please feel free to just type in your question in the chat box there, and we'll do our best to cover it as well.
And also, if you're on the YouTube live stream, in the description box, there's a Zoom link, so you can hop in here, and that way you can talk out loud, you can ask questions, and join everyone else on Zoom as well. So it's an option, but.
Very nice. Awesome, Jason. Okay, cool. All right, guys. So I will go ahead and transition over to my screen now. We'll look through building everything out A to Z, and we'll take a quick peek at the pro portfolio results here using a substantial amount of capital as well. Okay. So give me just 1 minute here, folks. We'll transition over to my screen, and we will get started on that side as well. And we're going to walk you guys through building out the portfolio A to Z today, just in case you don't have it built out at this point. All right, so I'm going to go ahead and transition to my screen now. What you're going to see on the screen, folks, is my account following our pro portfolio. Okay, so this is the portfolio that's a little bit more advanced. Okay, and really, it's quite popular with people that really kind of have over $100,000 to invest. Okay, I recently structured a portfolio on 6/22 of 2020. From 6/22 until now, we started with $800,000. We're now showing a profit of $137,063 here to the tick. Okay, so that was built over a little over 2 months. So just wanted to show that really quick, guys. And what I'm going to do here for you folks is simply what I'm going to do is I was showing people last week how to get the pro portfolio built and structured. Okay, and I've been doing that actually for the past 3 weeks in a row. And it's funny, Jason and Ryan, what I've been doing is literally just building these portfolios, closing them out. So I'll build it on a Tuesday, rebuild it on a Tuesday, close it out on Thursday, rebuild a new portfolio Thursday, ride it until today, and then close it out and then restructure. So we're going to switch that up a little bit, guys, but just doing that has been able to create $12,755 in profit so far. But what we're going to do, guys, is I'm going to close this out. I'm going to take this, my total profit from last Thursday to today with the pro structure is $2,240. But what I'm going to do here is I'm going to lock in this profit here, guys. That way we can use that capital to show you guys how to build the portfolio in real time today. Okay, so I'm simply clicking 3 buttons to exit the positions that I have here. Okay, in both UPRO and XLF. These are the pro trades. I will go ahead and exit those here live. Okay, and I'm going to switch this over to just a market so we get an instant confirmation there. Okay, and then I'm actually going to switch over this trade to market as well. Okay, just so we get an instant sell, and you guys can see us take that $2,704 profit live here. Okay, and then that way, just for time's sakes, we can go in. There we go. Both are liquidated from last Thursday to today. That was in the pro portfolio, so you can see both of these quantities are now at 0. And we did lock in our profit. So when you see the QTY right here, that refers to the quantity tab. Okay, and that is now 0. And as you can see, if I pull down XLF, that is 0 as well. Okay, so we took that really nice profit. All right, and just today alone, that was good for another $1,264. Super safe. So I was doing that just so I could liquidate. And now, guys, what we can do is allocate some of this capital. Okay, you can see my cash sweep and vehicle here is now $111,537.74. Okay, but what I'm going to do just for a really, really easy replication and benchmark here, what we're going to use is exactly $100,000 behind our trading setup. Okay. Yes, that's the point, Don, to take up the entire screen. Okay, so let's see here, guys, and keep your questions coming in here. All right, we will go ahead and jump into that. And Michael Taylor, I do see your hand is up. I'm going to go ahead and allow you to talk, bud. So once your microphone is unmuted, go ahead and ask questions live. And Don, if you want to go ahead and ask a question here live, we'd love to get the live interaction as well. All right. So just want to show you guys, taking the profit there, clearing out some capital. Okay, that way what we can do here, guys, is show you how to allocate $100,000 and start using that. And you saw Jason's account that started with $100,000 when we first started, but I'm going to actually walk you through basically building that out today in real time. Okay, so very cool, guys. And once again, if you are on a trial, okay, make sure to save my number and call me and text me if you have any questions to get started, or just always, guys, you can actually click on the link in the chat box to get signed up as well. Okay. But if you want, you can always send me a text and say, hey Dean, this is hey Dean, this is Don, or hey Dean, this is Michael. I'd love to speak later. Just send me a text, guys, and I will literally call you back in the order I do receive those text messages. So that's my cell phone right there. So do feel free to call me or text me. It's 505-322-7515. Okay, cool. Any questions? And first, any questions from our paid clients So let's see who all is in here once again on our paid client side. Okay, so okay, it looks like a couple of them may still be in here. And just real quick, guys, any questions at all as far as it goes with the existing setup? Hey, Saras, thank you so much for the nice comment there yesterday on the new kiddo. Truly appreciate it. Let's see here, Julio. Any questions for you, bud? Julio, how much have you made now since you started with us a few months ago? And let's see here, who else is in here? Do a quick shout out to some of the people in here. We have in Mike Taylor with his hand up. So Mike, feel free to go ahead and ask that question, bud, at whenever you're ready. We also have Cecilia Candido. Welcome in, Cecilia. We have in David Fast. We have in Dexter Tucker. We have in Don. We have in George Hoffman. We have in Ermin Reezy. Jim McLean, welcome in. Jules Ackerman, welcome in. Julio Alvarez, been following us for quite a while. Julio, if you can let us know what your P&L is. I think you've been following us now for, I want to say 3 to 4 months off the top of our head. Hey, Keith Milson out in the UK. Thank you very much for joining us here today, Keith. Appreciate your time. Let's see here. We have in Mark. Let's see here. We have in Paul Wright. We have in Raghu Sethi. We have in Rocky. We have Rodney, GB Clements, Sam Srinivas, Saras Ramahadan up in Canada. Thank you very much for joining us here, Saras. This has been on our buy and hold membership for a while. Okay, we also have in Van. So thank you, team. Appreciate your time to join us here today. And if you guys do have questions, just feel free to type them into the chat box or raise your hand and we will cover that. Okay, so without further ado, guys, let's look at structuring the buy and hold portfolio today. Okay, so this is what your trade alert will look like, folks, each and every day you receive it. Okay, so I'm going to scroll up to the top of it, and whether you receive the trade alert via text message or via email, it's going to look the same. Okay, so this is what you're going to actually see, and I have the trade alert on the right-hand side of my screen. Okay, and I have my my portfolio here on the left. Okay. So give me just 1 second here, guys. I'm going to shrink this up a little bit. That way it's just really easy for you guys to see the information here. And then we're going to go ahead and build out this portfolio live to show you guys how insanely easy it is to follow our ultra simple buy and hold portfolio. Okay. Now, there's a lot of research behind what we do, guys. But as far as replicating the trades, it's really insanely easy. Okay, so you can see here for the first thing, or actually, let me cover a couple things really quick. So you're going to see that the header at the very top of the trade alert. Okay, and then as you scroll down from the header, okay, you're then going to see the webinar replay section, and then scroll down a little bit more. That's where you're going to see the access to our live webinar. And literally, guys, you know, if you're on this portfolio live and you say, oh man, I'd love to go back through and look at all this, just click on that link that's in your text, right? It will actually take you through all of this information. Okay, so, and you can see here for existing members, there's simply no changes to the portfolios. And guys, we're already set up in such a beautiful manner. We don't need to make any changes today, right? We're set for an awesome ride into the election. Okay, and coming closer to the election, we probably will, kind of restructure the portfolio. But really, with quantitative easing, in the picture, the general thesis is a very bullish market. Now, to caveat that, we do have a hell of a lot of geopolitical tensions happening at the same time. So we want to be conscious of that. We want to be aware of that. And we always want to show you guys how to manage your risk. Okay. So there's just no major shocks to your portfolio at any point in time. Okay. So let's jump into looking what's the best thing to own from now into kind of, mid to late, October as we come closer to the election. Okay. So really, guys, our buy and hold portfolio is really good for accounts under 50K. Okay. And it was pretty cool. And Catman, I haven't seen in here today, but I know Catman was on our webinar last Thursday, and he structured the buy and hold portfolio roughly, I think it was about 2.5 weeks previous to last Thursday, and we were checking in with him on the live webinar. He made 10%. He used $25,000 behind this pro portfolio, or I'm sorry, behind the buy and hold portfolio. He made 2,500 bucks. You know, is pretty cool. You know, and was able to utilize that to start working with us. So that was kind of cool, guys. And that is the ability that you guys have today. Okay, so just ask any questions that you guys have as we go through this content. Okay, and the more questions you guys ask, the better the value you're going to receive today. All right. So certainly, guys, feel free to go ahead and you know, jump in here with any questions. So this is the setup right here. Okay, so per $1,000, you're going to buy the following. Okay, so you're going to buy 100 shares of UPRO, and you're going to buy, or I'm sorry, 10 shares of UPRO per 1,000. And you're going to buy 5 shares of SLV per 1,000. So if we take a look here, guys, the $1,000 mark. Okay, that's what we refer to as our tranche. Okay, really, really simple. Okay, a tranche is simply a set amount of capital that you're looking to invest. Okay, and we're using tranches of $1,000 as you can see in the example here. Okay, so what I'm going to do, guys, is I now have you know, over $100,000 liquid in cash in my portfolio, and the only reason why I've been able to generate these gains, guys, from 100,000 to this 11,000 or 100,000. I'm sorry, $111,537 in profit is simply by showing people how to put money to work. Okay. And I've been doing that for about the last 3 weeks. Been really fun, been incredibly helpful to our user base. So we're going to continue to do that just to show you guys how insanely easy it is to get your money allocated to start growing it today. Okay. So just jump in with any questions, okay? And guys, we're using the Thinkorswim platform here to place the trades, but it does not matter which brokerage account you use. You can be using any of them, okay? There's over 100 U.S. brokers in the U.S. That you can replicate our strategies with, okay? Some of the big ones outside of TD Ameritrade, okay, Schwab is great as well. They actually recently acquired TD Ameritrade, but there's going to be no changes to the TD Ameritrade platform. There's going to be no changes to the Thinkorswim platform. That was something I very closely looked into because I've been a client with TD Ameritrade now for, gosh, it's going on over 15 years. And they weren't my first broker, but they will be the last broker that I use for the rest of my life. And not saying you guys have to by any means, but any brokerage account will do. So some of the big ones that you guys may know and recognize well. Okay, Schwab, definitely, I'd say 30 to 40% of our clients are in Schwab. You know, the other really big one is Fidelity. Okay, there's a lot of 401k, IRA accounts in both of those firms. Okay, so you can absolutely use any of those. E-Trade's another big one. Interactive Brokers is another big one. I'd say TradeStation would probably be next. And then you have kind of the newer traders that are using the Robinhood, the Webull, you know, brokerage accounts as well. So pretty cool, guys. You can use any brokerage under the sun to replicate these trades, you know, if you're in the United States or in Canada. Okay, and that's just to mention a few. But what we're going to specifically do, guys, is direct your education today towards US people. If you have any clients and you're in another country, just refer to your investment consultant or just ask your questions here live, guys, in the webinar. Okay, if you do have any questions at all. All right, but the more questions you guys ask live, the better the value you're going to receive from us today. Okay, and we're going to go ahead and get this built. Okay, and get this working. So with no further ado, let's see what this looks like if I'm using $100,000. Okay, so let's pull up here on my calculator. Okay, because, and the whole reason why I'm doing this, guys, because my net liquidity in day trades is $111,537. Okay, and 74 cents. So pretty cool. So if I'm going to invest a notional, you know, dead on the money, $100,000 allocation today, okay, this is what it's going to look like. All right. So I know that I take this $100,000, okay, that I'm showing right here, okay, because once again, I have over $100,000 in my brokerage account. And just for easy live example and easy tracking, easy math, guys, what I'm going to go ahead and do is allocate another 100,000 to that today. And you already saw Jason's account earlier, right? Starting with the 100,000, he's now built up to 43,000 following every trade that the buy and hold has done. Okay, so what we're going to do, guys, is simply take our $100,000 and divide it up by our $1,000 tranche level here. Okay, so super simple math, right? We all learned how to do this in elementary school, I'm sure, if not a little bit younger for some of you. Okay, so we take our $100,000, we divide that by 1,000. Okay, and that's going to tell me, guys, I'm going to have 100 tranches. Okay, to build this out. So I take my 100 tranches that I have to build out, and I look at these instructions, right? And guys, feel free to stop me if you have any questions. Okay, but I'm simply going to take these instructions to buy 10 shares of UPRO, and I'm going to simply multiply that times 100. Okay, to see exactly how many shares I buy today. So it's super simple. Okay, and I'm gonna draw this out for you guys really quick, just so you guys have a visual example here, and it's easy for you guys to think about what I'm doing here. Okay, so I take the instructions to buy 10 shares of UPRO, and I simply multiply that times 100 to see how many shares I buy. Okay, so give me just 1 second here. I'm gonna simply do this on my calculator, right? Once again, simply using elementary school math to understand that we're going to build 1,000 shares of UPRO. We're going to buy 1,000 shares here live in our example, okay, to structure this build out. All right, so I'm going to go back here, guys, and I'm just going to understand that I'm going to be buying 1,000 shares. Okay, and I'm sure a lot of you were able to do that in your head, but for visual purposes, okay, I just want to show you guys that I'm buying 1,000 shares total. Okay, so now that's going to be of UPRO. So my allocation to UPRO is simply going to be 1,000 shares. And apologies, guys, I know my writing isn't the best here with the mouse, but I'm trying to improve that on a daily basis. Okay, and that's the ticker. So let's go ahead and draw a $sign next to it. Okay, now for SLV, we're also going to buy 100, 100, or we're going to multiply this times 100 because we have 100 tranches. Okay, once again, because we're allocating, $100,000 to start with. Okay, so let's take this. Okay, we're going to multiply it. That X stands for the multiplication sign. Okay, times 100. Okay, and real quick, an easy mathematical calculation, right? We know we're simply going to buy 500 shares, okay, of SLV. Now, so let me just draw this in here. Okay, so I'm going to switch up my my colors here really quick, just to show you guys kind of what we're net long, okay, and what we're also using as protection. Okay, so our net long position, okay, is right here. So I'm going to use this purple color just to show y'all that this is our net long, okay. So I'm just going to type in long here. So that's our net long position. Okay, now I'm going to use another color here to display that our allocation to SLV, okay, that team is our hedge. Okay, so this is how we are managing and balancing our risk of the portfolio. Okay, Does that make sense to everyone? Just want to check really quick. I'm going to check with the crowd here. Does that make sense to every single person that's in here today? Daniel Goley says, can you do option 2? Yeah, absolutely, Daniel. And great question. So in the buy and hold portfolio that you see here, we don't use options. Okay, so I'll just type in here, no options. Okay, and yes, our pro portfolio that I was showing you in my other account there, that is absolutely using options for additional and greater protection. Okay, so really, guys, this is a great portfolio for really anyone under 50K that they have to allocate today. And literally it'll take you 30 seconds to allocate your capital today to get your net long position to ride into the election and to build in your hedge. Okay. So yeah, Daniel, if you do sign up for the pro portfolio, that's where we're going to show you how to use options to hedge your account instead of with ETFs. Okay, so you can do it both ways, honestly. The options will typically give you a little bit more protection, okay, depending on how you want to structure them. Okay, but if we ever need a lot more hedging too, Daniel, okay, we can always just increase our hedge side. Okay, and okay, cool. We have a lot of questions coming in. So David Fast, go ahead first, and Mark, go ahead second. And Michael Taylor, go ahead at any moment there, bud.
Hi,
okay.
You hear me now?
Hey, David. Yeah. How's it going?
Yeah, what's going on? Okay, so I'm just looking at this and I just want to clarify with you because I was actually doing this math earlier and it kind of segues into another thing that I was going to say.
Sure.
But for this $1,000 portfolio, basically you have 20% in cash, 80% in stocks, and then the other 20% is in silver, right? Because if you do the math, if you have per tranche, you have 10 shares at $67 a share, so you're at $670 per tranche, and you're at $135 per tranche in silver, right?
Yeah.
So
Yeah.
that would be a 20. That's basically like 20% silver and 80% stocks.
So great question. Let's see what that is here in real time. Okay. And so we'll just literally walk through that example here live. Okay. So for UPRO, I know that if it's trading here at 64.60 on the ask, right? That's my net long is going to make up about 64.63% if I'm buying it right now, which I'm going to do.
Yeah.
Okay.
Yeah.
So yeah. And then let's also take a look at SLV. Okay. Cause this is the best way for me, David, to just teach you in real time, right? What that looks like. So if we bought, let's see here, and this might be a little tough to try to do in this double screen view. So I might have to pull this out to change this up. Okay, but bear with me here, guys, for a second. And I'm going to just go back to this smaller screen here. Oops. Yeah, I'm going to have to hit the confirm and send button too. Okay, so my hedge is going to be about 19%. Yeah, so literally right at the 20% level. Okay, you're referring to. So I'm just going to, I don't want to put that through here. I just want to make sure we all understand that example. But David actually had a wonderful question. David's one of our buy and hold members that just was asking about the ratio. Okay, so as of today, David, about 60, well, really, so 65 because it was 64.9, 64.60. So let's just call it 65, right? To give you easy round numbers. That's going to be net long. Okay. And your silver position, it's kind of funny how it's working right now. But it's literally kind of working as a little growth, but at a hedge at the same time. Okay. Because if the market does go into World War III, just say the worst case scenario goes up into play, that silver will actually skyrocket faster as the UPRO starts to fall. Okay. So, and let's use right here, just to lay this out, guys, and to help everyone kind of, really understand what we're teaching here. So I'm going to just annotate here that our long is about, if we buy it today, okay, it's about, and what our portfolio structure is today too, David, for you. Okay, you're about 65% long UPRO, and then our hedge does represent about a 20% position. Okay, that's hedge, and it's kind of funny because our hedge is actually going up with our net long, which doesn't, it happens. It's kind of rare for that to happen. But yeah, between the two, David, we have 85% of our capital working, and we have about 15% in cash. Okay. And we could certainly allocate that 15% if we see a really good opportunity. Okay. But for right now, that's what the portfolio structure looks like. Okay. So kind of really 65% long, 20% hedged. Okay. And our hedge just happens to be going up with our long currently because of monetary policy.
Yeah, basically, and I just wanted to add a little bit more to this. And I know that this may not apply to everybody in the webinar right now because it is the buy and hold, and I do understand that. But so let's say I have other shares of stock in addition to this buy and hold portfolio, and I'm not really asking for advice, but what I'm saying is that, like, if you wanted to hedge your whole account with silver, you can just take your entire net value of stocks that you're holding, and then take 20% of that, and that's how much money in silver you should have to hedge your entire account that you have, in addition to any holdings that you have in the buy and hold portfolio. Like, that applies to me because I have about twice as much money in other stocks that are outside of UPRO that I'm actually using this method with. So basically taking 20% of all of my stock securities and buying that much money worth of silver.
Yeah, David. So great question. Great intuition, both. Okay. And man, I'm always so impressed by you as a 22-year-old. Okay. But yeah, so I think the easier way to think about this, David, would kind of be, so your net long ratio, just think about it as 3.25 to 1. Okay. Does that make sense? Because, so if you take the 65% and you basically break it down to easy numbers, right? So instead of it being 6.5%, you could break it down to half that, right? So that would kind of be 3.25. Break your hedge down into 1, right? So that would show you for every 3.2 percent capital long, you're going to have a 1% hedge. Just that way you're following the exact same ratios here. Does that make sense?
Okay. Yeah, I see what you're talking about.
Okay, cool. And I figured you'd be smart enough to track on that.
Yeah,
Sweet.
thank you.
Yeah, great question, David. Awesome. Okay, cool. And let's see here. So keep the questions coming in, guys. So let's see here. Mark says covered call options. So Mark, we've done covered call options. Right now, covered call options is just kind of throwing your money away with the opportunity we have. Okay, we're massively outpacing the S&P 500 right now, and we're doing it with less drawdown. Okay, so there's a time and a place for covered call options, and really the best time to use them is when the market's flat. Okay. And yeah, we don't want to limit our upside by using covered calls currently, but great question, Mark. And we will use our option strategies in the pro. Okay. And the next question I have and Michael Taylor, go ahead, bud, and unmute your questions. And then Ryan, if you have questions that are coming out of the other live stream too, feel free to post them in here, bud. Okay. And next, and does that make sense for everyone? Just kind of walking through that A to Z. Okay, let's see here. And Michael Taylor, go ahead, bud. You can unmute your microphone at any point in time. All right, and let's see here. Don's question was next here in the chat box. He says, why did you sell all of your UPRO stock? Simply for example purposes here, Don. I'm going to show you how to buy it all right back right now. Okay, so the whole reason why I sold it, Don, because it was I sold our pro portfolio allocation, not our buy and hold. And what I'm going to be doing is buying the allocation here to buy and hold live. Okay.
Hey there, this is Michael Taylor.
Hey, Michael, how's it going?
I am moving today, and I probably raised my hand or unmuted myself or something like that while I didn't intend to, while I'm trying to pick the phone up and take it with me and try to see as much as I can. but
Sure.
I'm driving and all that. But I hear you talking about silver, and are you holding physical silver, or you? How are you doing that?
So, Michael, great question. No, we don't like to hold physical silver for a couple of reasons. Number one, I've recently found out to enter and to liquidate their position, their commission to enter and exit's about 6%. That's ridiculous. Okay, number one. Number two, Michael, I can own all the silver I want, whether I want to buy $10,000 or $10 million worth of silver. I can buy that in 3 seconds with an ETF. Okay, then I don't have some BS storage fee. I don't have some BS commission. I have zero commission to enter it. And then I can directly protect that asset in the options market if I want to. Okay. So the whole holding of the physical, not my favorite thing. A lot of people say, "Oh, money's going to go away." Yeah, right. I've been hearing people say the American dollar is going to go away now for 20 plus years, and 100% of the people that have told me that have been 100% wrong. Okay. So yeah, it's, and there's so many people out there selling doom and gloom that the American dollar is going to go away, and that there's going to be no such thing as USD. Well, I have news for you guys. Okay. If you look at Forex trading, anyone have any idea what percentage of Forex trading on a global basis, which by the way is larger than the US equity market, is done, and what it's pegged to on a generalized basis? Does anyone know what that looks like across the entire Forex market? Okay. When you look at, what they're basing their peg on, right? Does anyone know what that looks like? Let's see if we have anyone that's really financially savvy in the webinar here.
What they're basing the US dollar on, or what are you asking?
No. So what percentage of all Forex trading is based on the dollar and pegged against the dollar?
Almost 100.
Nailed it, Michael. Yep. It's 90, just shy of 93% of all Forex trading is based on the US dollar. Okay. And that is banks and governments around the world, guys, moving money. The US dollar is not going away. Is it devaluing in its value currently because of quantitative easing? Absolutely. Is it going away? Absolutely not. The Fed knows they have to walk that tightrope, right? And yes, they will continue to print, and that will continue to devalue the dollar. Okay, but all that tells you is you want to have your money in the market, not sitting in dollars currently.
I'm going to lose cell service here in about 5 miles. What I was concerned about with the silver is on ETFs or paper, there's the COMEX is not enforcing or not, I mean, they're aware of a giant fraud of more paper being sold than there are ounces of silver above ground. And they don't know how big the problem is. Years ago that was said it could have been 5 to 1, 10 to 1, who knows?
Sure.
But JP Morgan is known to be a big player in that scam.
Oh yeah, big time. Oh yeah, they manipulate the heck out of it. Absolutely, Michael.
So how to not get hurt should that collapse in silver trading? I think there's a great opportunity to trade silver, not hold it physical until the poop hits the fan.
Yeah, and not something we're worried about at any point in time, Michael. It's another one of those things that people write till the cats come home for clickbait. But yeah, not a real concern in the marketplace today.
Okay.
But great question, and absolutely. But yeah, just like oil, guys, it technically traded negative, and a perfect example actually was the ETFs. The commodity contracts went negative. The USO didn't go negative. Right? And that's the most liquid oil ETF based on WTI Brent crude. So you're actually literally safer to hold the ETF than you were to hold the physical asset in that scenario. So that's a really good question, Michael, and something that happened in 2020. Okay, so I think that's a great way to kind of address that question too. Okay, cool. And awesome. Michael is increasing his financial knowledge here as he's moving. Love to hear it. Okay, so let's see here. Okay. Let's see here, Don. Yeah, and Don, if you have a mic, bud, go ahead and unmute your mic so we can interact here live. So Don says, thank you for the explanation of the UPRO sell earlier. He says, why is TLT moving up? Well, at a 47 cent move on a $162 asset, I wouldn't really consider that as any type of concern, really. So really kind of a non-movement. Okay. And Don, what's your last name? Okay, cool. All right, guys. So let's go ahead and get this built out, right? So what I'm going to do, guys, is I'm going to take a quick screenshot here. Okay, that way you guys can kind of easily see, this example that we just built here. Okay, and give me just 1 second. And let me take a screenshot. And what I'll do, guys, is I'm going to post it into the chat box here, just so you guys have an easy reference to this, and I'm sure we'll come back to it at some point too. Okay, so all I'm doing here, guys, is taking a quick screenshot just to have a really good example for all of us to show, kind of what the structure looks like and why we bought it. Okay, so give me 1 second, guys. I am gonna just simply copy this here. That way we have this, and then what I'm going to do is clean up my annotations here. Okay, but that way we'll have that as a reference point. So give me 1 second here, guys. I'm going to clean up all the annotations, and then we'll keep on going. Okay, so I'm going to go ahead and clear all my annotations here. But we always have now our screenshot to reference back to as we look through everything that we're going to look through. Okay, and guys, what I'll do too is this way you guys can just scroll through this too. Okay, and just see why we're structured the way we are. Okay, and I'm going to go ahead and post this into the chat box so you guys all have this exact URL to reference as well. Okay, because I think that'll be a really easy way for you guys to look at that. Okay, so without further ado now though, guys, let's go ahead and build this out, right? And see what it takes to get this working in real time. Okay. And hey, David, fast if you can, but if you want to go ahead and just mute your microphone real quick as we continue along, that'd be greatly appreciated, but keep the questions coming, guys. This is really good. Really, really good questions today. Okay. So awesome. All right. Now, so we're going to go ahead and buy, okay, our 100 shares of UPRO for our long position. Okay, so let's go ahead and do that. All right, let's not talk about it. Let's see the work it takes to put that in. Okay, so I take my notional 100 shares here, change that to 1,000. Okay, I'm gonna take a look at my bid and my ask price. It's a 1 cent spread, guys. So I'm just gonna use a market order. 1 cent spreads are totally okay by me. Okay, so within 3 or 4 clicks and probably 10 seconds, we just bought 1,000 shares of UPRO. Okay. Oops. Actually, I think I bought 1,000 shares of silver on accident because I was still on that. So real easy, guys. And this will show you if you ever make a mistake, look, all I have to do, right, is get back to that 500 shares of silver. So my brokerage account, look, I recognize I made a mistake, right? No big deal. Not the end of the world. So, hey, simply go sell 500 at market. Okay. And, we'll see how that works out. Okay. So I bought too many shares on accident. There we go. Okay. Now we can go to the monitor tab here. Okay. And if you guys ever do make a mistake, I mean, that's how easy and fast it is to correct it. Right. So I have 500 shares of silver. Okay. So this side is done. So we have our shares of silver. Now let's go ahead and buy UPRO. Okay, so, oops, sorry guys. So all I have to type in here is UPRO. Okay, and I go over to the ask here. Okay, it has a 1 cent bid and ask spread. So I'm totally okay with that. I'm going to change my notional 100 shares to 1,000 shares. Okay, and I'm going to change to market. Okay, and I see I still have a 1 cent spread. So just for example purposes here, guys, it's going to cost me $64,570, okay, to buy my shares of UPRO. Okay. And I can go back to my monitor. And so that's it, guys. It took, so I actually messed up the trade. So I had to make, a couple more clicks, but that literally took me 2 minutes to put that money to work. Now, it takes us, Jason and I, a lot of time to design those examples in the background, right? And understand how to be allocated to what asset classes and why, depending on what's going on in the world, depending on what the Fed is doing. Okay, what the financial system is determining is going to be, the results in the market. Okay, and pretty cool, guys. Just like that, look, we made $1,000. We're up $1,100, literally in minutes now, putting money to work. Not saying it's always going to happen like that, right? Obviously, our UPRO position did pick up in price. But I can look at my filled orders here, guys, and see exactly what it costs me to build this out. So I'll expand my quantity here. Okay, you guys can see, and then I think this is what is the ticker symbol? Oh, there's the symbols right there. Okay, cool. So we can actually shrink this down a little bit. Okay, so you can see UPRO, I have 1,000 shares. Okay, and silver, I had to buy and sell some. But you can see here, right, my UPRO position. Okay, if I viewed trades, okay, I could see that I bought 1,000 shares, okay, of an average price of what is this, 64.70, okay, or I bought it at 64.53. I'm sorry, and now it's already up to 64.70. So that's how I'm showing that profit there. Okay. So really quick, just the $1,000 quantity, and I'll shrink some of this stuff up too, so you guys can see it. So you can see real easily, right? And let me turn on my pointer here just to show you guys what we're talking about here in real time. All right, my UPRO is simply a $1,000 or 1,000 share size position. Okay. So you can see that right here, UPRO, 1,000 shares, SLV, 500 shares. Okay. And my profit and loss for the day on those two positions since I bought it is $1,114. Okay. And as you guys know, it literally took seconds to, to actually enter the orders. It's 4 clicks to enter a position and it's 3 clicks to exit. Okay. And it's really cool, guys, because we're going to show you how to manage and balance your risk like a hedge fund. Okay. But unlike the hedge fund, you don't have the problem, okay, of having to try to, buy into and exit hundreds of billions of dollars worth of positions at once. You guys can see it literally takes seconds. Okay. Sometimes not even a second once you hit the confirm button to structure your position. Okay. So literally, total days we've made changes for the buy and hold portfolio this year, guys, it's been less than, okay, honestly 3 days. So, and you have to buy and sell, maybe say that takes you 10 minutes. Maybe you're a complete newbie that's never traded a stock in the planet. You have to call your brokerage to ask them to help you do that. Okay. Maybe that took you 30 minutes. Okay. And we're going to watch the markets 18 hours a day, 5 days a week. So you don't have to. Okay. So yeah, guys. And with everything going on today, the best thing you can do, without using options is own UPRO. Okay. And hedge it with silver. Okay. And like David was talking about, maybe you have some other positions, right? I think David uses us for his core macro strategy, right? And he does follow us with Real Capital as well, but he's also applying our strategy actually to his other accounts too, which is really cool. Okay. Hey, Rocky, go ahead with your question, bud. And Rocky, I do see your, oh, okay. Rocky put his hand down, so maybe he didn't have a question. So let's see here. Cecilia, Daniel Goley, Don, Ermin Reevesby, James Sweeney, John Cruz, and Ermin, I see your hand is up. Go ahead with your question, bud. Okay, you are unmuted. So feel free to go ahead and ask your question here live. And I'm going to keep cruising through these. Hey, Ermin, how's it going? Or Imran, I'm sorry.
Yeah, hi, Dean. I want to ask if I want to monitor the market follow-up during the day, what is the best site to go and see that?
Yes, so we use a Thinkorswim technology, and that's what we recommend, Ermin. But really, when it comes down to it, we like to monitor the Federal Reserve because they control the bond market, the stock market, and the spot price of gold. Okay, um, and instead of looking at like a technical indicator, like I could show you what my chart setup looks like, but really it's kind of irrelevant because what we're doing, Imran, is we're watching what the Fed does because they control the game. Okay, and just to give you guys an example, okay, let me kind of go over to this here. So I'm just on my platform here. All I'm going to do is click on the charts tab here, right? We can look at the SPY in this example, okay? And give this just a second to get loaded up, okay? So this is a pretty complicated technical analysis system that I used to use a long time ago, but now I just monitor the Fed because they control everything, okay? And so Imran, that's what we're going to show you how to do and show you how to attach your capital to is simply what the Fed's doing. Okay. So you can try to watch screens all day. But really, I mean, morally, all you have to do is watch a couple of things, right? So the SPY ETF is really good. Okay. And there's a couple other tickers that are good to watch. Okay. XLF is good because that's the financials. XLE is really good because that's the energy sector. Okay. So financial sector, energy sector here. Okay. And really, you want to keep your eye closely on the S&P 500, really, and XLF and XLE as far as general movement in the market, because these are your two weakest sectors, your two most beat down sectors. Okay, so if I wanted to watch the market, Imran, at a 10,000 foot overview, outside of what the Fed is doing, this is the next level I would kind of look up into. Okay, is how the sectors are working. And specifically, you don't want to look at the best performing sectors, right? That's easy to look at, right? And we all know tech. I mean, if you've watched the market for the last 20 years, you know that tech is outpacing every other sector. Okay. But really in this type of scenario, right? So here's the S&P 500, and this is a good example, Imran. It's sitting here at new all-time highs, but hey, let's take a look at XLF. Okay. And we can see, look, it's not back at new all-time highs. Okay. So that's kind of shown as the value play here. Okay. Could potentially be the value play. It could also be the absolute biggest risk to the market, right? So that's why I have XLF over here and XLE over here. And really between XLF, XLE, and SPY, I know what's going on. Also TLT, right? So that's the US Treasury market. But really, I can look at those four tickers and understand what's going on. But at a deeper level than that, Imran, we're going to look at the Fed. Okay. So what they're doing with the balance sheet, what they're doing with monetary policy, okay, and what they're doing with interest rates will determine what happens to the bond market, which is the most liquid. Stock market's next, then the spot price of gold. Okay, and really silver too is controlled, but gold's a little bit more liquid and bigger. So that's why they have a little bit more control over gold. And the bigger the market is, guys, the more control the Fed has. So the Fed's not going to control an individual company unless, so in this case, let's say the Fed starts really raising interest rates. Oh my Lord, you do not want to own a profit or a company that doesn't have a massive cash account and just massive quarterly profits. Okay. And there's a lot of them. There's a lot of them outside of the S&P 500, right? So you look at a lot of the super risky tech companies, right, that aren't making money yet. Those are the type of companies that are going to have one hell of a headache if the Fed really does raise interest rates. Now, the companies in the S&P 500, they're all profitable. They have to be to get in the S&P 500. and they have massive cash reserves. Okay. So that's why we want you guys to own literally the best of the best and not have the trash. Right. And you can do that literally by simply owning UPRO. Okay. Now, does that make sense, Imran?
Yes, it does in a way, but I was always under the impression that people used to say before that any one institution does not influence or cannot control the market. Market is much bigger. So now you're saying that the Fed is actually the final arbitrator, and it does control the stock market, bonds, and the metals and everything. So this is
100%. Yep, absolutely. And sure, no one hedge fund controls the market. I think that's maybe where you would have got that inclination from. But, you know, the Fed is not a hedge fund. The Fed is the system. Okay. And yeah, Imran, so from what we can kind of see, it looks like about 50 to 60% of the entire liquidity of the bond market and the stock market is owned by about 100 families, and they control the Fed. Okay. So yeah, they have the majority control of all of the assets. Okay. So absolutely, they're going to rig the game and control it however they want. Okay. And they do that with monetary policy. Okay. The balance sheet and interest rates. They control all three.
Is that a view shared across different fund managers like Ray Dalio and all that?
Yeah, absolutely, Imran, and we're actually going to dive deeper into that in just a second here. So great question, bud. Really, really phenomenal question. Okay. But yeah, absolutely, guys. So the Fed controls, so the Federal Reserve, right? It should be called the Corporate Banking Board of America, i.e. the richest families on the planet's, puppets. Call them whatever you want. That's the Fed. Okay. They absolutely control the US markets, right? So the bond market, the stock market, and really the spot price of gold too, with what they do with monetary policy. Okay. Now, if you look at,
I thought monetary policy is the call of the government to devise and maintain the monetary and the fiscal policies.
So it was, Imran, before the Fed was created in 1913.
Okay.
So great question. Really good question. But yeah, that used to be the part of the government's control. Now it's controlled by the Fed. And that really did change back in 1913 when the Fed was created.
Okay.
Yep. Great questions. Cool.
Thank you.
Yeah, my pleasure, Imran. Very, very good questions. And Imran, our module number 1 video that's actually in our boot camp, that will cover how much control the Fed has had, okay, over the last 92 years in the U.S. equity market. So this is the boot camp modules, right? So this is if you have a password to our to our website here, you can go ahead and click on this video, and it will literally walk you through how much control the Fed does have. Okay, so that's actually when you sign up today for either the buy and hold portfolio, okay, or the pro portfolio, you will get access to our boot camp, and that will actually walk you through literally how much control the Fed does have over the market. It's the first video in the boot camp for a reason. Okay, it's incredibly powerful to watch, and I tell people all the time, right? I'd say 95% of the people I talk to every day have no idea how much control the Fed does have over our markets, okay, over our equity markets, our bond markets, and really precious metals too, okay? But this video will kind of walk you through it, okay? Show you how much control and show you that the changes they've made over 92 years and how it has controlled and driven price action across those 3 assets, okay?
So what you're saying is that the Fed is controlled by a few families, and if those families are aligned with the around the big 2 parties like Republicans or Democrats, then they will be following their agenda in the times of elections. Then they will be keeping the market bullish like they're doing it now, and in other times they might keep it artificially weak. Are you saying that?
Absolutely, Imran. The Fed is literally the core of the U.S. financial system. Absolutely.
Hmm. Okay.
Okay. Yeah. And they're not going to relinquish the control, right? They worked really hard to get the control. They're not going to relinquish control of what they've built the control of, right? So, and I think the easy way to kind of get an easy, quick analogy for that, Imran, is think of, you're in Las Vegas and you walk into the Bellagio, right? We like to work for the Bellagio and understand what the Bellagio's motives are and continue to just print money instead of being the guy that walks into the Bellagio thinking he's going to take the Bellagio, right? And that's kind of the setup of how we're, really attached to the Fed, right? We want to be attached to the casino, okay, and maybe even a partner with the casino as opposed to trying to play against them.
Hmm. Okay.
Okay, great
Right.
question. Great questions, Imran. So yeah, so after you sign up, bud, make sure to go in and watch this module number 1. So after you get your username and password, guys, that will allow you to see all these videos in here too. Okay,
Sure.
cool. Okay, guys. So very cool, and I really like that question, Imran. It's fascinating to me, and I didn't know, guys. It took us, Jason and I, 34 years of looking into everything in the market, right? To really understand. There's one indicator that never fails. Okay, and a perfect example. Who knows the date? March 23rd, 2020. By chance? Who in here knows that date off the top of his head? Why was it significant to the US equity markets? Okay, I'm going to ask that question. Ha, David, you learned so well. I love it. Whew. I wish I knew what you knew at 22, David. That's awesome. Yep. Anyone else? What happened on March 23rd that changed what was happening in the US equity markets and the US bond market? Okay. And really the spot price of gold, right? They all readjusted on that date. Okay. And David, our 22-year-old client now knows this answer. Okay. Rocky says fraud. What's the fraud, Rocky? So I'm not aware of a fraudulent thing that happened that day, but interesting. Okay. So anyone else know that's out there? And guys, you can go ahead and type it in the chat box too. You don't have to unmute your microphone if you don't want. Okay, but I love that our client here, David Fash, just nailed the answer within literally 20 seconds of the time I asked the question. Okay. All right. Okay. So no one else has posted in yet. So quantitative, this is the day the Fed announced quantitative easing. Let's take a look and show you guys what that did to the largest market in the US. Little change there. Weird. The market bottomed, guys. Right? At this day, coming into this day, the S&P 500 was down 34%. Okay? Guess what the Fed did? It controlled the market. Why? Anyone know why? Why did the Fed step in with quantitative easing on that day? And look what's happened to the market since then. Right? Fastest run, if you don't know. Okay? One of the fastest runs in US history from point to point. Literally, we're looking at this here live, guys. Oh, Rocky says all this is QE fraud. Yep. So, and Rocky had a great question. He says, when is the next crash coming with all this QE fraud? Great question, Rocky. When it stops. Okay. So yeah, when it stops. And if you look back to 2009 to 2011, guys, that is when, okay, the Fed eased off quantitative easing, right? But the S&P 500 doubled from March of 2019, okay, to summer 2011, the market doubled. The S&P 500 doubled, okay? And with the amount of money trading, it was the fastest we've ever had that much capital double in US market history. So what do you guys think is going to happen this time? Rocky says QE is nothing but tulip mania. Yeah, Rocky, sure. You have some, I'd say there's some substance to that comment for sure. Okay. But we're absolutely going to ride basically the financial system is orchestrating, and we're going to make a hell of a lot of money doing that safely. Okay. Don says, aren't they easing off QE now? No, Don, they're at 80 billion plus a month. So nope. Yeah, we've seen, okay, and we'll look at this, guys. So we'll go through and look at all this. So really good questions. Yeah, my pleasure, Don. Absolutely, guys. Okay, so let's go through and let's look at this. So I just thought that what a better example to show you guys, right? And this is why you want to be attached to the Fed. Okay. Okay, so let's take a look, and let's start kind of cruising through the presentation here. Okay, and does that make sense? And does anyone need any help allocating to how we're positioned today? Okay, and what I'm going to do here too, guys, is I'm going to post this trailer into the chat box. Okay, so you guys can start putting this money to work if you haven't yet. Okay, so the trade alert is in the chat box there, guys. So you can just click on that link, and then that way you can go through right here. And let's just say you're going to use $25,000 today. It's funny, 25, 50, and 100K seem to be interesting, like starting levels that people use a lot. And some people are using 15K too. But recently that's been a really popular number. Okay, but just know your per $1,000 here, right, guys, is your tranche size. Okay, so let's just say you're going to use 25K. You have 25 tranches. So just multiply this by 10 shares by 25. You're going to buy 250 shares of UPRO. Okay, same thing here. If you're going to buy 25 tranches of SLV, you're simply going to own 125 shares of SLV, right? Super, super easy. Hey, Cecilia, go ahead. I see your hands up. Okay, and then we're going to go ahead and start jumping into this. Okay, and Cecilia, to unmute your microphone, ma'am, if you scroll down to the very bottom kind of corner here, okay, where you're going to see the chat box. So just you can either use the chat box there, or if you want to unmute, it's in the bottom left-hand corner there, Cecilia. And look forward to addressing your questions here live. Okay. Okay, cool. So as Cecilia is doing that, and Cecilia, you are unmuted and ready to go. All you have to do is unmute on your side, and you can ask your question, okay? Awesome. Hey, Rashid. Hey, bud, thanks for reaching out yesterday. Good to see you in here. Rashid signed up for the buy and hold program Friday. And are you allocated as of this point, Rashid? Okay, and Cecilia, go ahead with your question.
I am really still looking for because I have not started this.
Okay.
I just don't know how to use the platform, but I'm trying to be educated on your email where I have to start with, but I want to get all those things done. And
Okay.
I just want the link so I can study after the webinar.
Okay, great. Cecilia, yeah, so it's been sent to you in your email. Okay, it's been sent to your cell phone and your text messages, and it's also posted into the chat box, so you can access it in any of those three ways. Okay.
Okay, thank you.
Yeah, Cecilia, and one good thing to do too is, Cecilia, because I know you're waiting for some capital to transfer over. One thing you can do too is go into your brokerage account, and you can actually just look what use maybe 25,000 or 50,000, whatever you're going to start with, right? You can use that in the paper trading account just to get used to clicking the buttons to enter and exit positions. Okay.
Okay.
Okay,
What
cool.
button I have to? What button I have to click?
Yeah, so just grab our trade alert right from your text message, from your email, or from the chat box, and then just call your broker and say, "Hey, I want to paper trade this with 25,000, or maybe it's 35,000 for you," and they'll show you what buttons to click, how and where and why. Okay.
Okay. All right.
So we're
Thank you.
absolutely, Cecilia. So we're going to design the portfolio for you. If you need help clicking the buttons to enter the position, the brokers will absolutely help you with that. Okay.
All right. Thank you.
Absolutely, Cecilia. Thank you, ma'am. Great question. Okay, very nice. All right, so let's see here. Okay, and I see here, Rashid said he'd signed up last week, but he hasn't put money to work yet. Okay, cool. Just make sure to put it to work when you can, Rashid. Okay. The faster you put it to work, the more money you're going to make coming into the election. Okay. Jason said this earlier, and I tell people every day, look, cash is trash right now, guys. Okay, before we even had quantitative easing coming into this year, okay, if you're inland in the United States, you're looking at 7 to 8%, okay, inflation on an annualized basis. That means for every $100,000 you have in cash that's sitting either in your trading account or in your bank account, if you don't invest that money, guys, you're losing, let's just call it 7.5%, right? On an inland basis. And if you're not in a boom city, okay, that's what you're sitting at. If you're in a boom city like Austin, I mean, your inflation is going to be closer to 8 to 9%. But let's just say if you're inland, okay, and it's 7.5%, okay, your inflation is absolutely getting crushed. Or your value of your money is absolutely getting crushed day by day by inflation. Okay. And so we're going to kind of walk through that. Okay, cool. Okay. Yeah. So Rashid, just grab the trailer either from your text message, your email, or from the chat box. And then that way you can start putting your capital to work. Okay, bud? Very cool. All right. And all right, guys. So welcome to the investment webinar presented by portfoliobuilder.io. Okay. My name is Dean Gallagher. I'm the dedicated resource for all investors on your one-time free trial. Okay, guys, and let me show you a picture of the guys you're hearing from too, because I know for me, I'm just a visual person, right? I like to understand who I'm interacting with. Okay. And guys, now that COVID's starting to calm down too, we're going to go back to hosting some live education as well. Okay. So this is me right here. Okay. I'm on the left-hand side. And for anyone that is on a trial, okay, literally guys, I'm your partner and investment consultant. Okay. I actually have a team of 7 people that work with me as well to support you. So you actually have a concierge. Okay. And then every single day here during your live trial, you're going to have access to me and Jason both. Okay. So it's really cool. We're just going to give you guys a phenomenal amount of education and information that is absolutely unparalleled and unmatched in this industry. Okay. And look, guys, we've been in this industry for 17 years. Okay. and I've been studying everything under the sun in finance for the last 17 years. There's no one that's even going to get close to the amount of education that we're going to provide for you during your one-time free trial. Okay. So utilize it, guys, profit from it. Okay. And don't be afraid to ask questions. Yeah, Rocky, my pleasure, bud. It's wild, right? But you have to be playing the game with the people that create the game. Okay. So trial members, I'm your dedicated resource for any and all questions you have. Okay. Each and every one of you also have a concierge, okay, to ask questions to as well. Okay. And if for some reason that your concierge can't answer a question, they're going to put you on the phone with me directly. Okay. And I just want you guys to know that you do have access to me. And while you're here in the webinars, guys, ask the questions, right? Don't hold them back. The more questions you have, the better off you're going to be. Okay. Now on the right is Jason, right? He's our founder and chief investment officer. He's the gentleman you heard open up the webinar, talk about really the big picture of what we're doing. Okay. And what I do, guys, is I help clients transition from either money on the sidelines or money that's in ultra risky, stuff that they're involved in, right? And get it structured behind risk parity strategy. okay, and beautiful risk management. That's what it's all about. Okay, so I just wanted to quickly show you guys a picture of us, right? Just if and just really see if you guys, that way you guys know what I look like. Okay, you know what Jason looks like, and when we get to meet in person, right, you'll know who to come say hello to. Okay, but guys, I'm literally your dedicated resource for any and all investors on your one-time free trial. Okay, so reach out during the webinars with any questions. Make sure to save my number and call me and text me with any questions you have. Okay, so in the top right corner here, highlighted in purple, it's 505-322-7515. And if you want to text me and just say, hey, Dean, before I get started, I had one last question, or if you want to just pick my brain, right, about the markets for a little bit, call me. I'd love to do that. Okay, we love to talk markets and show people why we use strict risk management in our design and approach to the markets. We love to sleep like babies at night, knowing we're using risk management to protect our hard-earned nest eggs. Proper risk management provides consistency and reduces stress. Okay, let's take a look at one of the best performing ETFs you can own today. Now, we own the S&P 500 with a free leverage ratio of 3-to-1 without paying for margins or loans. Okay, and think about that, guys. I want you to think about this for a second. Okay, and this is why we're using this ETF. Okay, I can go get margin from TD Ameritrade today at 3-to-1. You know what that's going to cost me on an annualized basis? Anyone know that answer? Okay, 7.2% on an annualized basis. That's what margin cost me through TD Ameritrade. Now, if I go get a loan, if I go get a 1 year, 2 year, 3 year, 4 year, 5 year loan, guys, I'm paying, maybe if I get lucky on a 5 year, maybe I get down to 6%, maybe. Okay. So instead of doing that, let's use a smarter approach, right? Let's let someone else pay for that. Let's take a look under the hood of UPRO today and see why it outperforms the market in a huge way. Okay. So its core assets, right, is just S&P 500 swaps. All that does is create liquidity. Okay. We also have access to the US Treasury bills too, just creates liquidity as well. That's all of these vehicles do. Okay. And just want to make that clear to you guys. But this is how ProShares, or the company that owns UPRO and created UPRO, this is what they do all day. And they use a lot of leverage to deliver us 3-to-1 leverage. And they actually pay us to deliver that leverage instead of paying the broker for the leverage, right? Kind of clever, right? Okay, so here's the core stocks and the assets that they hold. Okay, it's all the best 500 companies. And I was just looking at the data today. They just changed that to 505 companies. Okay, so it's pretty cool. But it's literally all of the best profitable. Okay, and that's really important. You want to have profitable companies when you're in a global depression. Okay, and all of these companies have a massive cash pile built up. You have to have certain financial metrics, okay, to get in the S&P 500. And all of these companies, guys, if you look across the lot of all of them, the average market cap size is 53.9 billion. Okay, when a market gets to that market cap size, it has some cash on the side. Okay, so what does the sector ownership look like inside of UPRO? Okay, now this is interesting because the last time we owned the S&P 500, the weighting in technology was actually right at 23%, and now it's bumped up to 27.46. Okay, so that's from March to now. The massive, and it's funny, healthcare actually grew more than tech. Okay, coronavirus scare, of course, healthcare companies are going to do well, especially if they sell some type of solution into this crazy thing called COVID that ruined our economy really for no reason, as far as I'm concerned. Okay, but these two sectors grew the most. Okay, consumer discretionary, basically the same. Communication services, basically the same is back in March. Financials, basically the same. Industrials actually ticked up a hair, which is really strange. I think a lot of the industrials paid big dividends. I think that was kind of a flight to safety movement from March till now. Okay, consumer staples, basically the same. Utilities actually increased a little bit. real estate went down substantially. Real estate has gotten hammered, absolutely hammered since March, and absolutely makes sense. And think about all the empty malls that you see today, and really the number of forbearance forbearance paper in the mortgage market right now is unreal. I was actually just talking to my buddy today that processes their office processes the most loans for mortgages for people that basically that they kind of specialize in people that make decent money and have good credit. They're processing the highest amount of mortgages, actually dollar value loans of any office in Albuquerque. I was talking with him yesterday, and he's like, "Man, these delinquencies are going through the roof, but because the rates are going down," so it's specifically in Albuquerque, there's just a rush to buy, which is so wild. But a lot of that's because of funding money coming into the market too. Energy has just been crushed. Energy is down the largest of all these sectors from March until now. Okay, oil did trade negative, right? March 18th is the day oil went negative. 2020 never happened in history before March. Okay, materials about the same. Okay, but actually down just a little bit. But that's what the percentage weighting looks like. Okay, into this, right? So it's kind of cool. And hey, where's your value, right? Well, really, right here. Okay, that's where the value is, guys. Right there. Okay, those are the sectors that need to pick up and lift to keep us pushing into new all-time highs. Okay, or financials break down. Okay, that could be detrimental. Okay, so that's why we're watching it, and that's why we're specifically hedging the pro portfolio to the financials. Okay, now what are the top 10 index companies of UPRO, right? So Microsoft is technically the largest weighting in technology. Apple is considered consumer consumer discretionary. Okay, Amazon, all right. Facebook, communication technically, right? Facebook is technically the largest communication company on the planet. Okay, so is Google. Okay, Google's next, I should say, outside of Facebook. Johnson & Johnson. Okay, that's your consumer staples. Berkshire Hathaway. Okay, which is kind of a little subset of the financial industry. It's not quite a bank, but a subset. Visa is considered a financial, okay, and Procter & Gamble, okay. So pretty cool, guys. That's the top 10 index companies. Okay, that's inside of the ETF. Now, how and when are you paid to own UPRO? And literally, guys, you're going to get paid to own UPRO. So instead of getting margin from the brokerages, just margin up the S&P 500 3x, UPRO is going to pay you to give you leverage. Okay, pretty clever. Now, so as long as you own UPRO before these dates, okay, you're going to get paid your dividend about 7 days later. Okay, so if you own UPRO before and through the 23rd and the 24th of this month, you're going to get paid a dividend at the end of the month. Okay, now what does that look like? So this is on an annualized basis, guys, but you're going to get paid 0.56, or so you're going to get paid basically 5.6 cents per quarter in dividends. Okay, and guys, that's really not bad on a stock that's trading 64 bucks, right? So with the way the dividend and expense fees are working, your net return per 100 shares, okay, that you have working for you works out to an annualized dividend of $1.32 per 100 shares you own. Okay, so that's if you own it through the year, you'll get paid $1.32 per 100 shares that you own. Not bad, right? So think about it. If you own 1,000 shares, which is only a $6,000 position, right? They're going to pay you guys, let's see here, what it was, 13 bucks and 20 cents. If you own, how many? I have 16,000 shares. right? And I've never even done the math, but let's do it real quick while we have it up. Okay. And literally something I've never even thought about. It's just, I always think about UPROs. It's just, it blows my mind that I can own it and it actually pays me to own it. So I own 16,400 shares of UPRO in my pro portfolio. Okay. Let's see what this works out to. Okay. I'm going to multiply that times 0.1, or no, I'm sorry. It's going to be 0.0132. Okay. So it's, I'm sorry. So sorry about that, guys. So 1,600, okay, or $16,410, and I simply multiply it times 0.0132. Okay, so it's not huge, right? But it's still going to pay me pretty substantially just to own it in dividends every year. Okay, so in essence, UPRO is literally paying you to own it. Okay. So pretty cool. All right, guys. All right, let's go ahead and move to the next slide here. So what does the performance look like? So they know they're going to pay us to own the ETF, but what does the performance look like? Well, it's pretty crazy. Since inception, okay, its average is 33.18%. Okay, so it's more than paying you 3x what the S&P 500 is paying you. Okay, over that same time. Okay, and I simply just looked at the inception date of UPRO, looked at the same date of the S&P 500, averaged it all out over, and I guess at this point that's about 2 weeks old, but it's okay. And those numbers will fluctuate up, and this number will only grow much, much larger. So this number actually grows more and more conservative and underrated as the days go by, as we melt up with quantitative easing. Okay. But it's literally outperforming the S&P 500 by more than 3 times what it's done since the inception of the UPRO ETF. So that's great, right? But we want to protect the asset with either protective puts or married puts for a safe ride. Okay. And really, guys, and I'll edit my slide here after today, but you want to have some type of hedge. Okay, because I used to structure this this slide or this presentation specifically for people in the pro, because it was a little bit tougher to structure. But what we figured is the easiest way for you guys to start making money with us right away and to hedge and balance your portfolio is to do it with the buy and hold. Okay, so I'll change the slide up tomorrow, but we always want to protect our assets with some type of hedge. With the pro, we use a protective put or a married put. With buy and hold, guys, we're simply using a safe haven asset. Okay. And it's really cool. Same strategy, right? That all the pros use, right? Ray Dalio uses the same thing. He's either using protective puts, married puts, or he's hedging with safe haven assets. Super simple. Okay. And it takes a long time to figure the stuff out, guys, but for you to structure your money behind it, it's actually insanely simple and easy to do. Okay. So we do this work and watch the market 18 hours a day, 5 days a week. So you don't have to. We're monitoring the Fed balance sheet. Okay, we're looking at inflows, outflows. Okay, so you guys don't have to. So understanding our portfolio options. So first we have the buy and hold portfolio. Okay, it's great for accounts $50,000 or smaller, or let's just say, you're a really lazy person. Okay, hey, and I get it. I know lazy people out there. If you want to do less than 1 hour worth of work every year to grow your capital in a super safe manner, use the buy and hold portfolio. Okay, but really, guys, the buy and hold portfolio, everything we offer is going to be really conservative, right? We want to always have a defensive structure when it comes to investing our capital. Okay, but you can the buy and hold portfolio really is the majority of our client base using buy and hold have less than $50,000. Okay, because they want a little bit more aggressive growth to their capital. Okay. But with that being said, hey, we do have some guys using buy and hold that, have about 100,000 too. Okay. But this portfolio uses ETFs to be long or short specific asset classes. Okay. And that's it, guys. That's all Ray Dalio does. And you guys will learn about that more in a minute here. Okay. Minimal changes needed throughout the year. I only made 5 changes in 2019, guys. Okay. No options used, yet it returned 25.3% in 2019. Okay. Buy and hold trades are done every Monday at noon Eastern. All memberships are tax deductible for the year in which they are made. Okay, guys. So while we're talking about buy and hold, okay, and really, guys, this is the best portfolio for you if you have less than 50,000 to put to work. Okay, or maybe you want to just start small with this and put 50K to work today, just to put the feet in, watch how defensively that grows, watch how we make money in down markets, unlike literally every other, a financial service on the planet. Okay, and advisors. I still to this day have yet to meet a financial advisor that knows how to make money in a down market. It's insane. They just tell you to be net long all the time, which is BS. Okay, you need to be able to make money in all markets, guys, and that's why risk parity is beautiful. Okay, so for the buy and hold, really, guys, if you have less than 50,000, that's what you're going to want to put to work today. Okay, now let's go ahead and move to the next one. And just remember, guys, save your receipts, turn them into your CPAs. Okay, so you can actually use the cost of our membership to hedge off some tax exposure. Okay. So understanding our pro portfolio options, okay? This is very attractive to investors with the 100,000 to work with. Okay, and this is the portfolio that Jason is going to be covering live, and really, it's going to be every Monday, Wednesday, and Friday. Okay, he covers that at. I actually need to change this up. We just changed up these schedules last week, guys, so we could give more support out to our buy and hold customers. But these webinars are actually going to change to, it's going to be 3 o'clock Eastern time. Okay. And I'll edit all these slides tomorrow, guys. I'm sorry too that I wasn't able to edit these. I just got back from the hospital from having my second son. So Rowan Dean Gallagher is now here. He's happy. He's healthy. So is mom. And yeah, he was born on Sunday at 3:54 Mountain Standard Time. So guys, I apologize. These slides aren't edited yet, but I've been a very busy man this weekend. And also, last night, this morning, getting everything organized and set up for the kiddo. So, but this is actually at noon Eastern, guys. So what I'm going to do here is I'm actually going to make this edit here live. Okay, just so you guys can see, it's 3 Eastern. Okay, and those are the times that we're going to meet for the pro portfolio. Okay, and so I'll edit all these slides tomorrow to you guys, but just wanted to call out here that is an edit, and I apologize, I haven't had time to edit those yet. I've been a very, very busy man with the family. Okay, and so just know, guys, with the pro portfolio as well, all memberships are tax deductible for the year in which they are made. Okay, now understanding our boot camp. Okay, this program is for the investor who wants to learn how to fish, what lures to use, and why. Perfect for the investor looking to grow their knowledge on the options market. We send out options trades specifically to take advantage of the lucrative opportunities and powerful ongoing training that comes from an experienced trader's desk. Okay, now the boot camp is going to meet to conduct either its training modules or its live presentation, right? And everything will be live, but you're either going to be learning about options, okay, or Jason's going to be giving you live option trading examples every Thursday. Okay, now the boot camp is meant to be a complement to either the buy and hold strategy or to the pro. Okay, so it's a complement so you can learn more, dive deeper into what we're doing and why. Okay, now it's pretty cool. Okay, and it's neat too, guys, because you will have some cool bonuses for either one of these. Okay, but you will actually get for the boot camp, you're going to get access to this for 30 days when you join either the buy and hold or the boot camp. Okay, and just remember, guys, any and all of these tax memberships are tax deductible for the year in which they are made. Okay, it's simply line item it under membership fees and dues. Okay, and if you don't have a good tax lawyer that showed you how to set up that structure, simply click on the link in the chat box there to get set up with ours. They will absolutely show you how to do that in great detail. Okay, and really, guys, they can show you how to set up all kinds of neat tax structures. Okay, to help you reduce your risk in the market okay, and actually show you how to create a trading business too. They can do all kinds of cool stuff, how to turn you into an invisible investors, but just click on the link, guys, that is in the chat box, okay, to get set up with them. So, and guys, so we do have also our all access VIP lifetime membership, okay? And I tell people all the time, look, if 2020 was a really good year for your business, right, and you need some tax write-offs, guys, while it's available, grab our lifetime membership, okay? Because you can use that instead of paying, federal capital, either gains, whether it's on a cash account that you have or through your business. You can actually reduce what you pay to the IRS and get our help for the rest of your life while it's still available. Okay, now guys, it's important to know we only have 80 spots in our VIP lifetime membership. Okay, so take advantage of that before they're gone. Okay, and you're going to get exclusive lifetime members only webinar at 3 Eastern. Okay, so Jason's going to be starting that up here, okay, in exactly 2 hours. So, if you are an existing client and you wanted to upgrade so you can get into that really all access VIP exclusive webinar that happens every Tuesday, sign up today and that will get you upgraded into that. Okay. And guys, you're going to get select trades and VIP only webinars geared to the elite investors. To really elite investors only, okay, and it's available to the all access members, okay. And just remember, guys, if you do need that tax write-off, you can absolutely use that to hedge off your tax exposure for the year. Okay, now let's take a look at inflation, guys. This is such a critical metric to look at. Okay, now inflation. Now there's a picture of a 20 being lit on fire right here. Why? Because that's exactly what's happening to your capital today if you don't have it invested. Okay, so take a real hard look at what inflation is doing to your cash today. You'll want to be seated for this exercise. Okay, how much cash do you have in the bank or in your trading account today? Okay, and guys, I want to caveat that too, right? You want to make sure your bills and your expenses are taken care of for a minimum of at least 6 months. Okay, I like to really recommend a year. Okay, but take that into the factor, right? Pull that number out and look at how much cash you have that's not working for you. Okay, that's the capital, guys, that you want to allocate today. Okay, because if you're inland, it's losing 6 to 8% on today's metric, and that number is literally going up by the day because the Fed is printing money to get us out of the global depression. Okay, now let's use a quick example. Right, I'm always shocked how many people I talk to every week that tell me they have $500,000 sitting in cash, but their house is paid off, their cars are paid off, they literally have no bills, they're cash flowing, businesses and real estate and all kinds of stuff, but they have all this capital just being eaten alive by inflation and they're clueless until we talk. Okay, but hey, that's part of why the services we offer is so cool. And that's what's so fun about what we do, guys. We get to teach all of you guys these metrics. Okay, so let's just say you have $500,000 sitting in the bank or in your trading account today. Okay, let's just say you're inland United States, so you're losing 0.75% to inflation every year, right? That's how much money, team, you're losing. Let's see if that makes that number much bigger. So you're losing $37,500 per year to inflation if you have $500,000 sitting in the bank. Okay, if you have $1 million, guess what, guys? That is $75,000. If you don't invest that money today, okay, and you're not going to buy a house or you're not going to buy a business in the next 1 year, think about putting that money to work, guys. Right? Because otherwise, let's just say it's $1 million, you may as well withdraw $75,000 either from your bank account or from your trading account and light it on fire. Okay, and honestly, this number is ticking up. And as Jason was talking about earlier, literally from March until now, we've seen a 10% decrease in the value of the dollar. Okay, and that's from just March until today. So my stats were measured from January to January. Okay, that's when I always take all of my bills, and this is a really cool thing to do, guys. And do this if you haven't yet. Take all of your bills from this month, or you can even look back at last month. So look at August. Take your top 10 largest bills, save your itemized receipts, guys. Okay, and then go back, buy the exact same products, or if you have your credit card statement, look at those next year, see what adjusted. Okay, mine personally in Albuquerque, New Mexico, it's basically we have more people leaving our state than we have coming to our state. Okay, which will definitely slow down some of the inflation or shit. I'm paying 7.2% in one of the literally one of the worst cities in the country for its size. In our state's just atrocious, actually, on how many people we lose every year. Okay, because we have unfriendly, tax policies. My capital gains tax was just raised last year. My personal income tax was just raised last year, both. And it's something I think about daily at this point, right? To get out of the state and go somewhere else that I don't have to incur all that BS, right? So that's something my family and I are thinking about, very, very regularly, and I'm thinking about daily. Okay. But even in Albuquerque, right, at a low inflation rate, that's insane. Now, if you're in the Bay Area, oh my God, you're over 10% inflation every year. So let's just, you have $1 million sitting in the bank, you don't invest it, right? Let's just say, well, let's call it 11.5 to be ultra conservative. Okay. Real estate's actually moving up at 13 to 14% a year annualized. Okay. You're losing 6 figures to inflation every year if you're in the Bay Area. Okay. Or if you're in New York, same thing. If you're in LA, same thing. Okay. Washington, same thing. Florida's not quite as bad, just because of the way it's set up financially. But if you're kind of on the coast, guys, you're probably pushing kind of between, conservatively 19 to let's call it 11.5 on the ultra conservative side per year. Okay, so if you live on the coast, I mean, think about that, guys. The inflation rates right now are insane. And as the Fed is sitting here printing money, that's getting worse by the day. So think about that, right? Now, here's the rise and fall of the US dollar. Okay, and this is from going back to 1913. Hey, the Fed's created then. Okay, till now. Just insane. Now, the risk parity approach made famous by Ray Dalio, or how to earn 15% plus a year safely. Okay, guys, and the 15% plus a year is ultra conservative. We're almost there for the year already. We're not to the end of the year yet. Last time I looked, we were a little over 13% for the year. Okay, and we had 75% less volatility than the S&P 500. Okay, and we're outperforming it to the upside both. So it's beautiful, right? And welcome to risk parity. All right, and this 15% a year is honestly really low. Okay, but we love to undersell and over deliver. That's the name of the game, folks. That's a really great way to create trust with clients and work with them forever. Okay. Now, Jason and I did some pretty serious research over the years. Okay, we looked at hedge funds that were able to profit for more than 5 years straight. There was literally over 1,000 of them. Okay, wasn't quite 1,100, but it was over 1,000. Now we looked at hedge funds that were able to produce profit for more than 10 years straight. 372. Okay, pretty good. Then we pulled it out to 15 years. That dropped it down to 72. Then we pulled it out to 20 years. Holy moly, guys! 3 professional money managers in history. Okay, only 3 humans in history have ever been able to generate gains, okay, for more than 20 years. Okay, and specifically, Ray Dalio, okay, has returned the most money. So we looked deeply into what he does, and we found he literally is always long or short 3 asset classes: bonds, stocks, and gold. That's it, guys. Okay. Now, he has a really big fund, so for liquidity reasons, he has to go into markets outside of the US. Okay. But that's literally all he does: bond, stocks, gold, long or short. That's it. Okay. Now, who are the 3 legends? Jim Simons, right? Legend. Renaissance Technologies, percentage-wise, highest return ever over that 20-year span. But he's not accepting new money, so you can't work with him. So it really doesn't matter. Stanley Druckenmiller, right? And so with his hedge fund, closed in 2010, he now has a family office, very famous in the hedge fund industry. Once you become a billionaire from managing other people's money, you then just manage your own billions, and you tell your clients to go take a hike, basically. Exactly what Stanley did too. Okay. and a few other legends. If you guys know the names, you know who they are. Okay. Now, Ray Dalio's Bridgewater and Associates has returned the most. Okay. And they are not accepting new capital. And in fact, looks like Ray's actually may have got a little over his skis because he's had some liquidity problems. Okay. So with us guys, we have no liquidity problems. Okay. And you guys don't have to worry about us, going and structuring a family office. It's not part of our mission. Okay. We want to help the little guys, right? Look, if you're in any of these three funds, your capital requirements to get in them were probably over $5 million. Any of the times that it was available to get in. Okay. I completely understand. Most of our clients don't have 5 million liquid sitting there. Okay. So that's why we have that bridge, guys. And we're going to show you how to use the same risk parity approach that all of these billionaires have been using. Okay. But we're going to show you how to do it with your own capital and teach you how to do it, unlike the hedge funds, so you can show your kids and your grandkids. Okay. So we crunched the numbers and discovered literally all three assets are controlled by the Fed. Okay. The bond market, the stock market, and the spot price of gold. By allocating our portfolio's greatest concentration to bond stocks than precious metals, we've invested ourselves with the same goals as the Fed. Okay. And so typically, guys, we'll have our long positions in bonds or stocks, right? They'll represent the largest core of our position. And then, we'll have a tiny position in metals as well. Okay. Teach you guys something real fun here too. If you actually just hold a beautiful, we call it golden ratio of 45% bonds, 45% stocks, 10% metals, you'll actually make 9% a year. Okay. Over the 92-year history of the stock market. But if you understand when to be long or short, you can make a heck of a lot more than that. Okay. And you just need to focus on three asset classes, right? We're not going to be coming through the 12,000 publicly traded companies on the planet looking for the best thing and the next silver bullet. Let's get rich overnight. Not going to be what we do, guys. And subsequently, something that these three legends have never once done. Huh. Weird. You don't hear Motley Fool talk about that. You don't hear the penny stock pumpers talk about that. It's kind of funny, right? So next, we add a little kicker to it by using leverage to outperform the market. Then we add risk off components to bulletproof the setup. Okay, to top it off, we monitor the market 18 hours a day, 5 days a week. We'll send you trade alerts if we ever need to make adjustments to the portfolio. Okay. And let's take a look and see what the portfolio design is today for investors that have more or less than 50,000 to invest. Okay, guys. An important note here. So if you have more than 100,000 to invest currently, please type into the chat box 100K plus. Okay, if you have less than 50K to invest currently, please type in sub 50,000 into the chat box. Okay, this way we have an idea as to how we can best help. Okay. So if you guys are in here, okay, thank you, Paul. I see that. Appreciate it. And just type in the chat box, guys, if you have more than $100,000 sitting in the bank or in the trading account, okay, please type in 100K plus. And if you have less than 50K to invest currently, please type in the chat box sub 50. Okay, that way we'll see kind of where you guys are. Okay, thank you, Van. Thank you, Marcus. Appreciate it, guys. Perfect. Okay, guys, very good. And okay, Srinivas, very good. Thank you, Srinivas. Appreciate it, bud. Okay, guys, and we're still looking for answers here from Daniel Gawley from Dawn. Okay, thank you, Mark. Appreciate it. From Imran, from John DeCruz. John DeCruz, and I know you were here quite a bit last week, so welcome back, John. Thank you for coming and joining us again. Okay, Jules Ackerman, first time I've seen you in here. So Jules, if you can, just let us know if you're kind of 100K plus or sub 50K and just type that into the chat box. It'd be greatly appreciated. Julio, awesome, buddy. Julio, how much capital do you have behind buy and hold at this point? And how much have you made too? And Julio, I'm going to go ahead and unmute your microphone, bud.
How you doing? Can you hear me?
Yeah, Julio, good. How are you, bud?
Yeah, what happened is I was going to type something there, but what happened is, remember that the first time I did it on my personal account through the bank, not through my 401k.
Oh, yeah.
So remember the problem that I had with the 401k took like a month and a half to get the money in?
Sure.
So if I just looked at it only on the last account that I opened on TD Ameritrade, it's at 15.77. That's only for the last 2 months.
Okay. And how
15.7.
awesome, Julio? 15.77% over 2
Yeah.
months.
Uh-huh. And so,
Sweet.
but just buying silver and the UPRO,
Uh,
basically. So
yeah,
we started because the
sure.
other money that I made was on the other account that I had in Bank of America, Merrill Lynch.
Sure.
But that one was a taxable, remember?
Yeah. Uh-huh.
And I had a lot of mutual funds and okay. So I don't know exactly how much I made. I mean, I can go check it out and look at it. But
Sure.
I forgot about that account, opened the TD Ameritrade, and then I just follow your advice.
Okay.
And I'm I mean, I'm not complaining.
Very nice, Julio. And roughly kind of what does that dollar
I think
number look like for that
I think right
15%
now I am
jump?
about 80,000 right now.
Okay.
Basically, the whole 401k down that company, I put it into work.
Nice. So up a little over 10,000 bucks in 2 months.
Probably close to that, somewhere
Per
around there. Yeah.
Okay. Awesome,
And so, as
Julio.
a matter of fact, I gotta check it out. I just bought more today, so
Oh, cool.
yeah, I just put another tranche there.
Awesome,
So
Julio. Yeah, I love it. And Julio, you're a perfect example, bud, right? So, started with a little bit of capital, had to reorganize. And what you had to do, right, Julio, was self-direct.
no,
Was it
what
401k?
happened? Yeah, what happened is a 401k, but the company did not allow to invest on stock companies. They can only buy through the mutual fund that they had available. So I
Right.
have to actually first get the company to apply that they can actually do TD Ameritrade. After I got that, it took like a month or something to get that done. And now I
Okay.
wanted to buy options, and I still cannot buy options. So I'm doing a transfer from my, TD Ameritrade into now another traditional IRA that I have on my TD Ameritrade. So in that way I can do options. But it's been a headache. It's almost more than 2-3 months since I started
Sure.
this.
Yeah, and unfortunately, it's tough when you have some of those companies outside of your Schwab, your TD Ameritrade, or your Fidelities, right? And I know Julio kind of experienced this. There's American Funds is one of the bigger ones, and there's a bunch of stuff out there, but they only have cookie cutter products you can invest into. So like what Julio had to do, guys, is he had to transition into another brokerage account, and specifically he did follow our kind of, we only recommend one broker. You can use any of them, right? But we only recommend one. And so he transferred over some tax deferred accounts into TD Ameritrade. Okay. So now Julio can actually get all of our, education and such, and be able to replicate the trade super easily, just how we display our trades with TD Ameritrade, right? So now Julio, I know it took some time to get set up, but Julio, how much money you're going to make in the end by you having control of those assets will absolutely be worth every minute you put into that process.
Yeah.
Okay. And it's super simple with companies like TD Ameritrade, Fidelity, or Schwab. It's harder if you're kind of outside of that ecosystem. And those are the largest three in America for people that do have corporate tax deferred, investment structures through a company with a 401k or an IRA. Okay. But Julio, it took him a little work, and Julio, what did you originally start with? Was it like 10 or 20K?
No, I started with 30K, and then I put
30K.
another 10, and then I'm going another 40.
Oh,
So,
cool.
so I'm close to 80,000, I think, on that account.
Nice. Awesome, Julio. And very very typical, right? Julio started with a smaller amount, and as he's got more comfortable with what we're doing for him, right, he's scaling up and adding more capital into his portfolio. So awesome job, Julio. I love it, buddy. And
Yeah, one thing that I might ask you later is, are you familiar with the Thinkorswim from the web? Because
uh,
it's kind of a buggy, I think, or something. I wanted to ask you a question. Do you know about the web later? Because I don't want to take the time for the other people. So.
okay. Well, hey, but I'll show you real quick. So this is their software platform, and this is what we do our training on. Have you downloaded that yet, Julio?
Yeah, but what happened is it was a little more complex than the web. The web is much easier. I like it in the sense the way it's set up. You
Okay.
can see your accounts on the left side, and the right side you can see each of the accounts where you hold in it. It's very nice. I mean, it's very simple setup.
Sure.
But before you couldn't, make it bigger, like a stretch, change the time or anything like that. But now they're adding things as I go. I have the other one, and I haven't learned the one that you're showing right now. I'm just
Oh,
looking at it.
okay, cool. Yeah, and just call them, Julio, and just let them know what you want to do, and maybe get back to a setting you're at or something like that. They're incredible with that, and over the years, I've probably called them 20 times to help them adjust stuff and to look at how to reorganize the placements and all that type of stuff. But yeah, Julio, call them. They're incredibly good at that. They're actually rated the highest in customer support of any U.S. brokerage that's out there. So yeah, Julio, give him a call, bud. And I was thinking about this, but I got to talk with Jason, maybe too, guys, and we'll talk about it. I might be able to just kind of transfer you guys the code with TD, and we'll kind of look into that. I got to kind of run it by legal too to make sure it'd be okay. But we may be able to just send you this link, Julio. But let me check in with Jason on that. Okay, so that way you guys would see literally our just exact same setup, so you guys could literally mimic what we're doing.
Okay.
Okay. But yeah, call them, Julio. As far as, changing things around aesthetically, they're going to be super happy to help you.
Okay. Thank you so much.
All right, Julio. Well, congratulations, bud. And I'm glad we're growing your capital here.
Okay.
All right. Thanks, bud. Okay,
Thank you.
guys. Yep, absolutely, Julio. And thank you for that, bud. Appreciate it. Okay, guys. And so just so since the time we've allocated, it was roughly about an hour ago. Okay, we're up $1,223.50 just from building the structure here today. Okay, so very cool, Julio, and thank you, bud, so much for just kind of touching base and giving us a real live update. And so everyone knows, Julio's been one of our clients now for about 3 months. I had to transition over some tax deferred accounts, but is having some fun with us. And Julio, we're actually going to meet daily now for the buy and hold too. Okay. So pretty cool. It's an added level of education there for you as well. And David is working, or Julio is working full time as a software developer, but learning from us where and when he can, and having a good time. So awesome, Julio. Love to hear it, bud.
Thank you.
Absolutely. Thank you, buddy.
Okay.
Cool. Thank you, sir. All right. And David Goley said, thank you. Hey, David, my pleasure, bud. Okay, guys, now let's keep on rolling here. So very cool. And keep those questions coming in. Okay. We love them. And we love to hear, hey, if you have allocated with us, maybe you allocated with us last week during your free trial, we'd love to learn how much you're up here too, guys, how much you've made in that time. Okay. It's been neat. We've been getting a lot of, really cool, just live interactions talking about their results, and just always so neat to see that. And that's what keeps us working super, super hard. Okay. So cool, guys. Let's go ahead and transition back to the slides here. And thank you once again, Julio. That was awesome, bud. Okay. All right, guys. So we had a couple of people that typed in the chat box. We heard from Paul, we heard from Van, Marcus, Srinivas, Mark, and Daniel Goley. So anyone else, guys? And thank you, Julio. We know Julio's working with about 80 now and has scaled up from his initial start of 30. Very cool. So Daniel Goley, how much are you working with, bud? Let's see here. Don, how much are you working with? Imrim, would love to know how much you guys kind of have sitting in the bank in cash that you're looking to allocate. Okay, John DeCruz, Jules Ackerman, Makta Meckelman, and Makta, I want to apologize in advance if I didn't pronounce that properly. I think I may have botched that, but feel free to go ahead and unmute your microphone and let me know how you do pronounce that. Manahar Basmati, hey Manahar, hope all is well, bud. I know you've made a substantial amount of money with us during your trial. So thank you for joining us here today. Let's see here. We have in Mark too. And Mark, thank you for letting us know how much you're working with. Marcus, I haven't heard from, I did hear from you, Marcus. Actually, thank you. Appreciate that. And then let's see, I heard from Paul Wright. So thank you, sir. And Rashid, I know we talked last week. So I know kind of total investment, you're looking at about 118, 119 to put to work. So that's awesome. And Sam T, haven't heard from you as well. So feel free to go ahead and type into the chat box, guys. And to do that, just scroll down to the very bottom of the page here. Okay. Okay. Gotcha. Sam T. Gotcha. Thank you, Sam. Appreciate that, bud. Very nice. Oh, man. And I'm sorry to hear about that, Sam. That's Sam was saying he's had some trouble with some tenants not paying. Is it rent, Sam? And is it residential or commercial real estate? We've seen a lot of that lately. I talked to this guy in New York, literally like 60% of his portfolio is in New York, and he's looking at selling all of it to get out of New York, which makes sense. It's pretty crazy. Okay, guys. So looks good. Looks good. Okay, home tenants. Yep. Okay. Thank you, Sam. Appreciate that, bud. Okay, awesome. Okay, so now I've heard from almost everyone in the group here. Okay, not quite everyone. So feel free, guys, just to type in if you're working with more or less than 50. If you're over 100K, you're working with, type in 100 plus, and if you're sub, just type in sub 50. Okay, and all right, guys, we're gonna keep rocking here. Okay, perfect. So let's go take a look at what we're doing. And just real quick, guys, I want to ask you, how much capital do you have working for you? So how much money do you have invested? And how much money do you have sitting in the bank or a trading account being gobbled up by inflation, right? If you have less money working for you than you have in the bank working for you, you're going to want to switch that around, okay? Julio, it's incredible. I used a market order for, let's see, how many shares did I buy in the presentation? 1,000 for UPRO, and I used 500 for silver. It had a 1 cent bid and ask spread on both, so it's beautiful. Yeah. Yep. So you could certainly use a market order. If you want to save a penny or two, you can use a limit and just use the ask price. Okay. But yeah, guys, huge funds. I was actually just looking this morning. UPRO is well over $1 billion for the size of the fund. I don't know silver off the top of my head. That is going to be something I will add into the slides here. Okay. But really, silver is a small, just hedge is at 20% of the exposure. Okay, and really just good to know that it's just exposed to silver. Okay, so silver is a good asset as the Fed is continuing to drop the cost of the dollar through the roof or through the floor here. Okay, but you want to put it to work, so it does this instead. Okay. Okay, now this is the only chart that you're going to need to see in 2020, 2021, and 2022. So yeah, Rashid, that is not something we're shorting, bud. Rashid, you will see what we are shorting in the boot camp presentation on Thursday. Okay, and we do have a short bond position. Okay, but good question. And typically, unless we're shorting the position, we won't try to talk about it too much. But you will absolutely see, Rashid, in your first boot camp webinar on Thursday, what we are short in the market, okay, and how to get that exposure as well on Thursday. Okay. My pleasure, Rashid. Very nice. And make sure to get that capital to work, Rashid, so you can be like Julio, talking about the gains you made. Okay. And guys, time, I'm telling you, time is not on your side right now. When you see the bed balance sheet doing this, you want to be invested. You do not want to be in cash. Okay. Now, literally, guys, this is the only chart you need to look at for probably the next 2 years. Okay. This is the Fed balance sheet. Okay. What happened in 2009 when you had this spike in the Fed balance sheet? Markets bottomed and they went up substantially, right, for the next few years. What happened this year? Fed balance sheet skyrockets. Market bottoms. Okay. And this time, guys, look at how much we had to grow the balance sheet this time compared to last. So what do you guys think is going to happen to the stock market this time compared to last? Whew. Lightning ride. Okay. But we want to take that lightning ride with risk management. Okay. Whether you're using ETFs and safe haven assets to develop that risk management, just like we're doing here today in buy and hold. Okay. Or if you guys want to get more advanced and maybe people like Mark that are using a substantial amount of capital, hey, maybe you use options on top of using safe havens as well to get even greater protection for your assets. Okay. So once again, guys, what does it look like, right? Simple. Okay. And really, guys, if you have less than 100 or less than 50K, that's what you want to use. Okay. And if you have more, you absolutely want to use our buy and hold or our pro system if you have a little bit more. And really, guys, just depends on your risk too, right? So I would say most of our clients under 50 years old are using buy and hold. Okay. Because they want a little bit more risk. Okay. But you're still always going to have risk management, guys, but it's going to grow a little faster. Okay. If you're not using options to on top of it to give it even greater protection. Okay. So let's take a look. Let's see how we're doing. Okay. Let's look at the track record. Okay. And let's actually go look at this live here, guys, because that's we take a screenshot right at the open. But let's take a look at this live and see what this looks like. All right. So this is our track record here for buy and hold. Okay. It's sitting at 12.93% return for the year. All right. Let's take a look and see what the S&P 500 is return for the year. We're smoking it. Okay. S&P 500 return for the year is 9.68%, but we look at our portfolio, we're up just shy of 13%, smoking it. Now, right, March, S&P 500, guys, was down 34%. Okay. Let me just zoom in here for you guys, actually, so we can see this a little bit better. Okay. So March, the S&P 500 literally, guys, down massively. Okay. 34%. Guess what? Our drawdown is only 6.73%. Okay. And we go over to the end of the year here, smashing its performance for the year too. Okay. So that's everything we've done. Not only do we have less drawdown, so less pain, less stress, less sleepless nights, but we're outperforming. What's better? Right? And guys, we're not trying ultra risky stuff, right? We're showing you guys how to run your portfolio just like Ray Dalio. Okay. And we're actually beating Dalio for the year, right? He ran into some liquidity issues. We smoked him last year too, right? But we did learn risk parity from him and study that to the T. Okay. And it's neat, guys. And here's the other thing. Guys like Dalio, right? They're not able to enter and exit positions in seconds like we are. Okay, it's going to take them weeks. So a lot of times, guys, that's going to be the difference of 3, 4, 5% if it takes you weeks to enter and exit a position compared to seconds. Okay, so think about that. You literally have the same type of strategy, okay, that some of the wealthiest people in the world are using with Dalio's hedge fund. But there's a couple of cool things too. Okay, not only are we outperforming them, but you'll never have a liquidity issue ever. Okay, because our quote unquote small fish clients, right, that the hedge funds don't want, that kind of have less than $5 million to put to work. Guess what, guys? That's our optimal sweet spot, right? And you, as an advantage, you have an advantage over Dalio because you can get in and out quicker with the same strategy, right? So pretty cool, guys. And as Jason was pointing out, August actually just came off the best month ever with the buy and hold product. Okay. So pretty cool and getting just awesome exposure to that upside. Okay. Because, we kind of looked and saw the signals were clear. The smoke was clear and we got a lot more bullish, right? The overhang coronavirus was scary for a long time, right? And the economic impacts are still scary. However, the virus isn't scary at all. Actual deaths in the United States just due to coronavirus, no underlying other symptoms, less than 10,000 deaths. Okay. Just insane. And we shut down the world for something like that, just stupid. But hey, we are where we are, right? We all know, something like that outbreaks again, sure, you know, be careful, right? Use a little protection here and there for yourself and for other people. Keep life going, right? There's no need to shut down the economy again for something that won't even kill 0.001% of the US population. You know, it's nuts. But it was a great way to throw some massive daggers into the US economy. And I got to say, China absolutely won doing it. Okay. But hey, unfortunately, we hook, line, and sinker. All of America basically went hook, line, and sinker. So it's kind of crazy. But hey, we are where we are. All we can do is learn from it, right, and get better. Thankfully, we were able to learn from what we did financially and still massively outproduce the S&P 500 and have a hell of a lot less drawdown. Okay, when they were absolutely getting smoked these 2 months, right? We had 75% less drawdown, and now to the upside, outperforming at a rate of a little over 30, 40, so much between 30 and 40% to the upside now too. I'm sorry, between 30 and 40% to the upside. We're outperforming them. Okay. Yeah, Chris. So Chris came from the other technology question. Yeah, absolutely, Chris. You could absolutely use 5K with a buy and hold. Yep. So absolutely, bud. And that's how, you know, that's the safest way that we know to put it to work today, Chris. Okay. Right there, buddy. So that'd be 50 shares of UPRO, 25 shares of SLV. Okay. Cool. Okay, so let's take a look and let's see here. So in Marcus, happy to show you what, or Mark, I'm sorry, happy to show you what the pro portfolio looks like as well. Just send me a text too. Okay, Mark, and we'll cover that. And let's see, here's my phone number on this page. I can't remember. Give me 1 second. Let me see if it's on this page. And what I'll do, Mark, is I'll send you actually, oops. Okay, it's not on this page. Mark, I'm going to send you a text here. Okay, guys, I'm going to leave this up here just so you guys can see it. So if you haven't allocated yet, that's what you do per $1,000 you have to work. Okay. And I'm going to start looking through these questions here. Okay. And thank you very much, Chris, for that question from Chris Taffo. Appreciate it, bud. And absolutely. And Ryan, if you want to send Chris Taffo the link to the pricing page too, that would be awesome. Okay, guys. So perfect. Now let's go ahead and take a look. And what we're going to do specifically is work through each person. Okay, Paul Wright. Okay, Paul was saying he had sub 50 to invest. Paul, what does that look like? What do you have that's kind of loose sitting in the trading account that's in cash? Or what does that look like loose that's sitting in the trading account or in the bank account that you're looking to transfer over to the portfolio and get that money working for you instead of getting burned by inflation today? Okay, and I know you're sub 50. Okay, but this is how you'd put it to work, Paul. And let's just say you have 30,000. Okay, you'd simply, once again, multiply your share structure. So we can look at that, guys. And let me put my number up on the screen here, guys. And then that way you guys can all text me. And if you want to work through that one-on-one, we can absolutely do that as well. Okay, but it's 505-322-7515. And Mark, specifically, I'm sending you a message right now. Okay, so we can we can see who all is in there. Okay, oops, and I think Mark may have left actually. Okay, let's see if I can talk to Mark here. Okay. Okay, now Van, how much are you looking to put to work today? And Marcus, how much are you looking to put to work? Srinivas, how much are you looking to put to work today? And Mark, how much are you looking to put to work today? And Sam T says 10K. Okay, cool. So Sam T, let's look at your example first because you were the first one to type in the exact number. Okay. So Sam T, I'm going to pull up the trade alert here. Okay. So if you have 10K to allocate today, let me grab my annotations here. We'll turn these on. And if you guys want, I'm going to go ahead and unmute all of your microphones. So if any of you guys want to go ahead and ask questions live, just jump in there. Okay, just unmute your microphone, jump in and ask those questions live. I'm unmuting all of you guys right now that are in the Zoom webinar here. Okay, cool. Okay, perfect. So if you guys can either type into the chat box, or if you guys want to unmute and just say, hi Dean, this is Imran. I'm looking to put together, put to work 35K today. We'll walk you through exactly what that looks like. Okay. And so let's take a look here for Sam T. Okay. So Sam T, this is what we're going to do if you have if you're going to use $10,000. So this is for Sam. Okay. Sam T, he's looking to use, okay, 10K. So let's just put this up here. Okay, Sam, and just really simple. All right, what we're going to do here is pull up our calculator. Okay, give me 1 second to pull it up. I guess I lost my last one. Okay, oops. Let me shrink this here for you, Sam. Okay, so you simply take your 10K, Sam. Okay, and we divide it by this notional $1,000 tranche that we use. All right. And we know that, okay. Oh, nice. Srinivas says he got the formula you mentioned in the presentation, and I will put 10K today and then 15K tomorrow and see how it works. Thanks. Hey, my pleasure, Srinivas. Awesome. Look forward to seeing how you do, Srinivas. And yeah, smart man, kind of recognizing that sooner is better than later. Because literally, guys, while the Fed is out here printing money, right, the value of your dollar is devaluing by the day right now. Okay, so great job, Srinivas. Okay, yep, and my absolute pleasure, Srinivas, and we'll see you here tomorrow. Okay, we'll see how that worked from today until tomorrow. Okay, perfect. Okay, guys, so for Sam K, we know that he's allocating 10K, so he's going to take his notional $10,000, simply divide it by 1,000. Okay, and he knows he's going to build 10 tranches. Right, so for Sam, he's going to come in here. Right, he's going to multiply this times 10. Okay, so he's multiplying this notional instructions of buy 10 shares of UPRO. He's going to multiply it times 10 because he has 10 tranches. Okay, and I'll type it in here. Tranches. And once again, guys, I apologize for my bad use of mouse here. Maybe I'll get a good I don't know what they call it, but maybe I can get some type of pad so I can annotate and write better for you guys live. Okay, but that's going to show me, guys, that you're simply, Sam is going to buy 100 shares. Okay, of UPRO. Okay, perfect. Okay, and he's going to multiply it times 10 tranches here. And so we all know he's going to buy 50 shares, right, of SLV. All right. And then, okay. All right, Sam. So that's it, buddy. That's how you put your 10K to work. It's simple. Right? Does that make sense?
It does make sense. Thank you very much.
My pleasure, Sam. Look forward to working with you, bud.
All right. I have no, it's like I'm just tight on money, I got some deadbeats because we have a great Democratic governor that is okay with people not paying rent during this COVID situation, and that's why I have deadbeats right now.
Sure.
The
What
worst
state are you
part-
in, Sam?
I'm in Tacoma, outside of Seattle.
Okay.
Yeah. So, but anyways, I still have like a great retirement. I've got about $400,000 sitting in retirement, but I can't touch it, and I won't mess with that.
Okay. Is it in an annuity, maybe, Sam, or
It's a Voya account. It's a state. It's a school teacher type account. It's a
Okay.
SEB or something like that. I don't know.
Okay. Is it maybe an account, or is it kind of specific to the state of Washington, maybe?
Specific to the state of Washington, yes.
Okay. Do you know when you can take control of that?
It's a plan 3 for whatever that means. But I can take control of it like at age 62, which is about another 3 years or so.
Okay. Gotcha. Well, hey, Sam, this is a great way, bud, to put your money to work. Okay. At least, kind of up into, and as we kind of gyrate and move through the markets until that area. That way, and hey, you could, if you need to, you can rebalance that on a quarterly basis, take your profits and then just reinvest. Or if you need to do that on a monthly basis too, Sam, you can absolutely do that as well. Okay. And I know kind of a handful of our clients are rebalancing their own portfolios. What they do, guys, is they take profit, okay, at the end of the month, and then they restructure at the beginning of the month, so they can actually use that as kind of like an income thing. Okay, I tell people, look, it's better to do that on a quarterly basis or really an annualized basis. Okay, just so it's a little bit easier for you, and you won't miss big gyrations in the market. Okay, but that is, Sam, a way to kind of take this and turn it into an extra income stream for you too, just until things kind of come back, or whatever changes with the personal ecosystem. And I'm sorry, Sam, that's a bummer. I know some people that I was recently talking with a guy in New York that is literally liquidating like 17 pieces of real estate right now because there's they don't have to pay rent anymore. There's rent forgiveness programs, and he's screwed. That was his entire line of income, and and sure, he'll get some money back from liquidating, but I don't think that's fair to him as a business owner.
No, the worst part about this whole situation is including this $600 extra a week bonus for these unemployment type people collecting that. They got extra $600 a week. You'd think, and that was originally put out so that they would not miss any rent payments. They wouldn't miss out on any car payments and make their credit card payments and stuff like that. And I have people working for the city of Tacoma, 2 of my renters that not paying rent. One idiot works for Microsoft.
Wow.
Yeah. Yeah. So it's
Crazy.
people with good jobs and they're working full time, but they're,
Right.
And they've been drifting in and out of unemployment, per se. But yeah, it's just really disappointing that I'm on the end of that. And I've never been in this situation before. And fortunately, at least I don't have any mortgages on any of them. I only have a mortgage on my own house.
Nice. Well, that's good. Thank the Lord for that.
Yeah.
Well, yeah, Sam, and man, I'm sorry to hear about that. And for the longest time, I remember so many of my friends were like, "Oh, real estate's the safest investment you could ever have." Right. and then COVID hits and it was like, oh, whoa. Like I remember reading about, rent forgiveness programs. I go, well, who picks up the bill for the business owner?
Yeah. There's no programs out there for landlord owner types. And
yeah. That's crazy.
Pretty disappointing. Anyways, I don't want to hold up your program. I learned so much out of you guys' free information. I want you to know I take tons and tons of notes. You'd be impressed at the notebooks I filled up with,
Nice.
information. But I take lots and lots of notes, and it's really changed my way of doing things. I did buy into the UPRO yesterday, and I bought into some SLV yesterday also. But I bought what I got 50 shares of UPRO, and I got 25 shares of SLV, and I'm getting more probably next week. So I'm adding to a small position, but I'm trying to make a difference here.
Awesome, Sam. Very cool.
I certainly appreciate all the free information and all these fantastic webinars you guys put out. It's very informative, and I don't see how you can't learn from this and make a few bucks too. And have fun.
Awesome, Sam. Well, hey, that's our goal. And you literally kind of just nailed our 3 bullet points of our mission statement. So I love it. That means we're doing our job.
Okay. Thank you very much.
Hey, my pleasure, Sam. And Sam, I just posted the link to the chat box to go ahead so you guys can review our pricing page. Okay. And just click on that, Sam. You can get started with us, and it's pretty cool. You can, as we talked about earlier, you can actually use that membership fee. Just expense it under membership fees and dues. You can do it through your business or through you as a personal investor, and expense that. Okay, so instead of paying the federal government, and tax money, you can use our costs and services to hedge that off and grow your capital.
Okay, thank you.
Awesome, Sam. Thank you so much. And thank you for the wonderful compliment. Appreciate it, bud.
All right.
Okay, awesome, Sam. Okay, let's see here. And Paul says, he says, Dean, I have 75K in a 401k from a company I just recently left. So I'm looking to invest a smaller allocation of 20K and build it up as I get more familiar with your program. Okay, perfect, Paul. So basically you can take literally Sam T's allocation right here and double it. Okay, so it's just simply 200 shares of UPRO and 100 shares of SLV if you're going to allocate 20K today, Paul. Okay, very, very cool. Okay, guys. And Paul, when you sign up, bud, just knowing that you have more than 50 to invest to, I'll get you access to that to the pro portfolio for 30 days when you sign up today too, Paul. Okay. Just because you do have, over that 50 limit, you may want to try the pro. So I'll let you try it out for 30 days as well. Okay. And anyone that has more than 50K, too, guys, more than willing to help you out with that, just so you can try out both programs. Okay. Yeah, my pleasure, Paul. And the link is in the chat box, Paul, to go ahead and get set up. And then, so for Paul, let me just write this out. And I think and understand kind of the ratios, right? They're real simple. It's elementary school math. But let me just clear these off really quick. And Paul, I'm going to write it up here for you. Okay, so for Paul, using 20K, okay, he is going to allocate to 200 shares. Okay, and I'm just going to use S dot. Okay, so it's a little bit faster. And 200 shares of UPRO. Okay. And also on 20,000, you're going to have 100 shares. Okay. Of SLV. Okay. So there you go, Paul. Super easy math, bud. Okay. So Paul W allocating 20K. Perfect. Okay. Looks good, guys. Okay, who else is in here? Let's see who else. And guys, feel free to go ahead and unmute your microphone too. If you guys want to just walk through a live example, would love to help you do that. Okay, and awesome. So far, we had, let's see here, Srinivas is allocating 10K. Let's see, Chris Taffo is allocating 5K. It looks like Julio allocated another 40K, existing client. Sam T is going to allocate 10K here. Perfect. Okay. Yep. Paul Wright says, got it. Yep. Super easy. Awesome, Paul. Look forward to working with you, bud. Make sure to click on that link in the chat box to sign up with us. And like I said, Paul, happy to give you that 30 days to the pro portfolio on us. Okay. Cool. Awesome. Yeah. So, and our whole point, Paul, is to make this just super easy for you guys, right? And really, guys, we're going to do all the complicated work, right? We're going to be watching the market 18 hours a day, 5 days a week. We're going to be watching the central bank here in the state of, in the country here of the United States, because they control the bond market, the stock market, the spot price of gold here. We also too, on top of that, watch the G7 central banks as well. They do have quite a big influence on the market. The U.S. market still is by far the largest out of the G7 markets, and by far and away monumentally bigger. But we do monitor that, okay, and absolutely look forward to showing you guys literally how to monitor that, look at what they're doing and why. Okay, and that's something you guys will develop with time with us, right? That's not something you're going to learn overnight, but guys, that's part of what we're going to teach you over time, and it will, take some time to figure that out and to learn it. But just know we have 34 years of experience that can translate into, a pretty quick, a pretty quick transition and allocation for you. Okay, very nice. And let's see here. Okay, awesome. Okay, awesome, guys. And let's see here. Looks like a couple people signed up already. So thank you guys for the support. Excited to work with you all. Okay, and Imran, go ahead with your question, bud.
Dean, I understood that in the buy and hold advisory, you're talking about leveraging, and UPRO is a mechanism for leveraging. I didn't understand how it works, because UPRO is apparently something like a shares you invest into, right? This is an investment like any other share, like ETF and all that. Then how does it become a leverage mechanism also?
Yeah, great question, Imran. And give me 1 second, bud. Well, let's go over to the UPRO asset itself. Okay. Oops, sorry. I had it this morning. I'm sorry. I actually clicked off the screen. I was actually grabbing some data from it. Okay. But let's go ahead and let's look at UPRO. Okay. So if you go to proshares.com/fund/UPRO performance and quote, okay, this is the page it's going to take you to, Imran. Okay, so I'll kind of read through this here. So ProShares Ultra S&P 500 seeks daily investment results before fees and expenses that correspond to that 3x daily performance of the S&P 500. Okay, so they're going to do all the work for us, Imran. All we have to do is buy this ETF. They're going to figure out how to own, okay, these 505 companies. Okay, plus, so here's all the companies, right? And it's all the best companies literally on the planet, guys. I mean, let's look down kind of halfway through, and hey, look, there's Schwab, right? We're kind of halfway down the list. There's Schwab, right? There's DuPont, right? I mean, all massive companies, right? Waste Management, they do the trash management for, gosh, probably half the municipalities in the United States, if not more, right? Massively profitable companies. Biogen, right? One of the best performing biotechs of all time that's super profitable, right? You're not buying into some, might be biotech. You're buying into one of the best on the planet, right? eBay, right? Eaton. I mean, just these are companies, guys. ConocoPhillips, right? Electronic Arts. I mean, I know people that work for literally half of these companies, right? Centene, headquartered in Kansas City. I actually visited their office on a work trip one time, right? So yeah, guys, these are all the companies that Olds, Amron. Okay, but what it's going to do is it's going to go get exposure to all of these 505 companies. Okay, and then also with the S&P 500 swaps that are in here. Okay, and it's going to trade that back and forth, Amron, to deliver us 3x times performance. Okay, now so I think this is good to kind of show you. So this is where it's going to be all the swap. So they take that, they use a lot of leverage to then deliver for us about a 3-to-1, actually a little bit over 3-to-1. If you look at since the inception of the S&P 500 to today. Now let's take a look in real time to see, okay, so the SPY's up 0.59% for the day. Does everyone see that let's see here. And I'm going to go ahead. Let's see, am I already on the big buttons? You know what? I might be able to make this a little bit bigger for you guys. So let me see if I can make this a little bit bigger for you guys just for the demonstration here. Oh, okay, I am at the largest I can get. Okay, so let me turn on my annotations here so I can show you guys a little bit easier. Okay, so we have right here, all I'm going to do is click on my charts. Okay, so I'm going to click on charts. That takes me to the S&P 500. Okay, so the S&P 500 is up 0.6% for the day. Okay, it just ticked to 0.61%. Now let's look at UPRO. Okay, so you can see this work in real time, Cameron. Okay, now it's up 1.88%. Okay, so let's take out our calculator and see how ProShares UPRO ETF is performing on the day. Okay, so we're at 1.88. Okay, and just now when we looked, also the S&P 500, let's divide that by 0.61 from 1.88. Okay, and beautifully done, doing its job, outperforming over 3 times the S&P 500's result today. Does that make sense, Amron?
So you're saying that it's leveraging 3 times the actual investments. How does the hedging mechanism work in this ETF?
Yeah, so on their side, they're using all of these vehicles, right? They're using all this S&P 500 swap, okay, plus all of these companies, right? To then take that, use a lot of leverage, trade it back and forth mechanically, and then for us, our net result is delivered at basically just over 3 times return, as we just saw there live in that example. Okay, but they're trading all that back and forth, and it's pretty complicated on their side, Amron. I mean, they're using liquidity pools, they're using market makers to do all this trading. They're hyper trading all this stuff back and forth, right? But the net delivery for us is 4 clicks to get into that position, and our capital's leveraged 3 times. So let's just say you're going to put in, 100,000 today, okay, into the S&P 500. You could put it in UPRO instead. Okay, and all of a sudden that exposure and the return that you're going to get, right, is just like having 300,000 invested, but you only had to put 100,000 into that 3x leverage vehicle. Does that make sense?
So is there any downside?
Yeah, so absolutely, and great question, Amron. So certainly, so if the S&P 500 is not going up, we're going to then draw down at 3 times the rate of the S&P 500 as well. Okay, so yeah, absolutely right. So if we get the move right, we benefit from it massively. Okay, if we get the move wrong, sure, it's more painful too. Okay, so the upside's greater and the downside's greater. Okay, but that's exactly why we're hedging, right, our 65% long with our 20% SLV position. Okay, just in case that S&P 500 position starts to get in trouble. Okay, what we can do is let's just say, let's give you a scenario too, Amron, that World War III starts overnight. What we'd see the next day is for us to sell UPRO, remain long silver. Okay, probably even increase the amount of silver we have, and then we'd probably grab a U.S. Treasury position as well, because safe haven assets such as precious metals and bonds skyrocket up when the market sells off. Okay, and it's pretty cool. You're going to get a text message, an email, and we're also going to cover the trade here live, literally every single day. Okay, if we do have any changes. Now, short of World War III happening between now and the election, Amron, I don't think we're going to have that. But if something really volatile hits the market, you're going to have our support and understanding on how to transition your capital to keep it in the safest manner possible. Okay.
I thought it will happen in a split of second or a minute, and we wouldn't get enough time to take the position, isn't it? If that were to happen, if there was a war that would have broken, then...
Yeah. So sure. So we're going to experience some pain in UPRO, but this asset's going to go skyrocketing through the roof. And this is going to actually so safe havens actually trend up faster than the market trends down. Okay. And a lot of people don't realize that. And that's part of the beauty of risk parity. Okay. So sure, we're going to have some pain in UPRO. Okay. But that's exactly why we have SLV to help hedge some of that pain. Okay. And instead of having one single company that we're invested in, we have 505 of the best on the planet. Okay. So that's not going to be as bad. And it's kind of neat too. So inside of the S&P 500, oil actually skyrockets in times of high volatility. Okay. Which will actually push up all the energy companies. Okay. Which will help offset some of that loss too, just because of the way this is structured and built. Now, the utilities that are inside of the S&P 500, guess what? They're a flight to safety too. Okay, that industry also works as a flight to safety. So the utility is only 7% of the total S&P 500. Okay, but that's going to be an asset that bids up. Okay, and between them and energy, it's going to be about 12, 13%. All of that's going to go get bid up as the rest of the S&P 500 sells off too. So there is actually some diversification metrics built inside of this as well that's going to help protect you. Okay, and then think about 65% net long, 30% or 20% in your safe haven asset. That safe haven asset's going to go up at a faster rate than the S&P 500 is going to drop too. Okay. But yeah, and that's going to be, Imran, where really, if you wanted a greater level of protection than what is offered here, that's where you may want to go to the Pro portfolio. Okay. And let me just walk you through what that looks like here. So I'm going to switch accounts from one to the other. Okay. And I have UPRO hedged with a put option right here. Okay. And this put option is actually going to go up in value as the market falls down, and deliver a really nice result for us there. Okay. So that's where the Pro may make a little bit more sense. If I tell people, look, if you have over $100,000, you may want a little bit more protection. Okay, if you're sub 100K, you're looking to grow your money, right? Once you have a couple 100,000 or a couple million to invest, you want to, sure, you want to continue to grow your money, but you want to add more protection as your nest egg gets bigger. Okay, and Amron, what a lot of our clients do is they'll start with buy and hold. Once over 50K, just depending on the person, or maybe once they're over 100 or 150K, they'll call me and say, okay, Dean, let's go ahead and upgrade to the Pro because I do want more protection for my capital now that, I have more money invested in the markets. Okay.
So you're saying that it is not fully protected in the buy and hold position because of the silver position is you're investing about $27 compared to the UPRO where you're investing $67. So there's a disparity in the hedging mechanism there, right?
Yeah, exactly. We do not want a full hedge. There's absolutely no reason to have a full hedge right now, Imran. That's stupid because it's just going to draw on your return, right? When you have quantitative easing, that's when you want to use leverage to the upside. Sure. And we're going to hedge that, right? But we're never going to hedge that at 100% of our upside. Okay. And if we wanted to do that specifically, Emran, and I would never recommend this, and just know, guys, this is not how our portfolios are built. But what you could do, Emran, if you did want to do that, is just hedge with the triple leverage silver position. You go 45%, into your silver, and then you go 45% into UPRO, and then you have that exact hedge. But we don't want that, okay? Because we know the S&P 500 is going to skyrocket for the next, really into the election. That's when we're going to see our next bout of volatility that's going to hit the market more than likely. Okay, so then we'll show you guys how to add additional hedges at that time as we get closer. Okay. And we'll show you how to structure. You'll see exactly how we get structured when you sign up, right? And so that way you never miss a trade alert from us. Okay. And that way you'll understand exactly how to avoid that volatility. And just like our track record shows, instead of having, a 34% drawdown right here, and literally I'm going to write this on the screen real quick. Okay. Your drawdown, no joke, at this same time, okay, in March, okay, was negative 34% on the S&P 500. But you look at our results, we had a drawdown of 6.73%. So let's do the math on that, and let's see how much pain we did avoid last time by doing that. Okay. Sorry, guys. Sorry about that, guys. All right. Could you guys hear that audio on your side too? Sorry, I had someone trying to call me.
Yeah, we heard the audio.
Okay, sorry about the little disturbance
No
there,
problem.
guys.
No problem.
Okay, cool.
So okay, I'll let you finish your line of thought. Yeah.
Okay, cool. Yeah, so let's take a look at this here, guys. Apologies once again. That was someone trying to call me through my computer desk line, so I apologize. I'm gonna have to start muting that. Yeah, Sam thought I got hacked. That was hilarious. Okay, so let's take the 34% drawdown. Okay, we had in the S&P 500. Now let's divide that. Okay, by 6.73%. So we could understand that our drawdown was literally, guys, 1/5. So I actually was wrong on my numbers. So our drawdown was, and I was just kind of going off the top of my head numbers there, was actually literally 80% less than the S&P 500. Why? Emron, because we did have some hedges built in, and sure, we inherited some pain, but I will any day of the week, I'd rather have my account draw down 6.73% instead of 34, right? Wouldn't you? And does that make sense, guys?
Yeah, I see what you're saying. I hear that. Now, Dean, I see listening to the different views on YouTube and Google. Of course, we see very strong two opinions coming through in today's market about the stock market. One view is that market will, like you carry that view, that market will stay bullish because the government and Fed, as you said, is behind that, and they don't want, because of election reasons, any bearish weakness in the market. The second view is that there is an imminent correction, i.e., market crash due any moment now, and that's why you have got guys like Warren Buffett selling all the time, all the financial and all of the stocks.
So Emron, so many people confuse every single Warren Buffett headline with just massive, overstated, just reactions that should never be said. But like I was talking about earlier, they're using that as clickbait to produce revenue for some marketing company or for some financial service. Okay, Warren Buffett has sold out of banks. Okay, he sold out of airlines, but those aren't two sectors you really want to be in. Okay, and he's still net long 145 plus $1 billion at this point. Okay, and he's selling treasuries, so that's insanely bullish of a setup. Okay, and Warren Buffett at the same time, he is also buying stocks too. Okay, if you look at his 13Fs, he did just allocate to new positions as well. Okay, and he's buying private companies too. So selling treasuries and adding to stocks is actually really bullish, and that's the net result in his portfolio over the last 2 quarters. Okay, so just be careful about the clickbait BS headlines. Is kind of the easiest way to think about it. Okay. Yeah, and just know that his exposure in equities is larger than bonds at this point, which is a very, very bullish setup for that size and structure of a portfolio.
Right.
Okay. But yeah, in Emron, the people that say that there's a looming market crash, I get it. And unfortunately, a lot of those people that's how they sell their, their technical systems or whatever it is that they sell. Right. It's easy to sell fear, but I got to tell you, the people that understand the Fed are long here. Okay. And the hedge funds that understand the Fed are long at kind of a leverage ratio of 100 to 1 instead of 3 to 1.
Okay.
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 But yeah, great questions, Amron. Love them. Love them. Great questions.
Sure.
Okay. Yep, my pleasure, bud. So yeah, the easy money, Amron, is on the long side. Okay, and look, just know that if we see some changes in the Fed balance sheet, we see that quantitative easing go away. Whew, you're going to see us switch positions. Okay, but really, until that happens, let's safely ride up, right? And yeah, we don't have full and complete protection. Okay, but if you did want an added level of protection, I would tell you, think about maybe the pro portfolio. Okay, because we have option protection. Okay, and a greater ratio basically in that option protection here. Okay, but just a cool way to kind of think about that. And yeah, if you certainly wanted more protection, Amron, I would tell you, take a look at our pro system. It will show you how to use options to get even more protection around that.
Yeah.
Okay.
Yeah.
Okay. Awesome, Amron.
Awesome. Thank you. Thank you.
Hey, my pleasure, bud. Thank you very much for the great. You had 3 really good questions. So great job. 4 actually, because you had 2 on that last one. So good job. All right, guys. Any additional questions here? The link is in the chat box for you guys to go ahead and get set up. And then Ryan, if you want to post that into the live feed as well, that's outside of Zoom, please feel free to go ahead and do that. All right, guys. And let's see here. Hey, Sobergen, how are you doing today, bud? Haven't seen you for a while. Let's see here. Van, if you want to go ahead and unmute. Sam T, go ahead and unmute, bud. Rashid, if you have any questions, go ahead and unmute. Marcus, Mark, Makata. Oh, and Mark, so we'll go through the pro program as well. And it sounds like Imran might want to do that as well. Okay, cool. And Sam T, any last questions for you, bud? Any questions at this point?
Nothing. Thank you. Thank you for your wisdom and all your comments. And like I said, this is an excellent learning environment, and I'm just learning so much and applying it to my trading.
Awesome. Awesome, Sam. Yeah. And it's it's a good time to be long, and it's really cool, Sam, when you put your 10K to work right on the long side. Really on the UPRO side of things, right? You're taking that capital and it's actually getting leveraged, right? Yeah. So let's say, 6,500 is going to go into that UPRO. Really that 6,500 kind of instantly turns into, almost 25K. So that's really cool, right? Because of that simple leverage ratio that's built into UPRO. Yes. And so, you're basically taking that 6,500, right? Simply multiplying it times 3. I'm sorry, just shy of 20K. You're putting to work there with your 6,500 bucks, right? So beautiful way to drastically increase your buying power there.
Okay. Thank you very much.
Okay. Hey, my pleasure. Awesome. Okay, guys. And Magda, go ahead with your question, bud. Oh, hey, how's it going?
Good. No question. I'm on my free trial. This is my first Zoom. I'm just listening in.
Oh, cool. Well,
presentation.
Okay. Well, awesome. And ma'am, how do I pronounce your name? I want to make sure I have it perfect.
Magda. You said it right.
Okay, Magda. And how do I say your last name, Magda?
McConnon.
Okay.
Yes.
Magda McConnon. Very cool.
Yeah.
Beautiful name. I've never heard the first or last name. I love it.
Yes, I get that a lot.
Where are you from originally?
East Africa, Ethiopia.
Oh, cool. It's neat. We have a lot of clients that are originally from Africa that have moved to the States that are getting interested in the markets. And that's been a really big part of our business growing this year. So awesome. So hope you enjoy everything, Magda, and any questions at all. Okay, yep. Feel free and reach out with them. Okay, we're here to help.
Thank you so much.
Absolutely, Magda. My pleasure, ma'am.
All right.
Okay, cool. All right, guys. Any other questions? Amron, did you have another question there, bud? And then Daniel, Don, Jules. Let's see here. Marcus, Rashid, Sam, Sobergen, Van. Go ahead, Amron.
No, I'm good. Thank you, Dean.
Okay, cool. My pleasure, guys. All right, guys, and before we close out, I'm going to go ahead and I'm going to play a testimonial here. And just remember, guys, make sure to click on the link that is in the chat box. Okay, that way we can start working together here today. All right, and real quick too, guys. So one thing I wanted to talk about too that I actually forgot. When you do sign up, guys, you will get access to our bootcamp content. Okay, so you can go through all of these modules. Okay, and it's pretty cool. There's actually some neat little nuggets in here. This short the Chinese yuan for massive profits. Okay, and actually module number 3, how to short the Hong Kong dollar. Okay, that's actually going to show you guys how to potentially set up a 12,000% return opportunity. Okay, if and when the Hong Kong dollar does break from the Chinese yuan. Okay, so that is a more exotic trade that we have. Okay, but that's going to be something you learn about when you do sign up for the boot camp. Okay, or when you sign up for either buy and hold or for the pro strategy today, guys, you will get access to the boot camp for 30 days on us. Okay, and it's really cool. You will get access. You can go through all these modules right now. You can learn how to place options trades in TD Ameritrade. Okay, you can learn about call options inside out, upside down, everything you need to know. Okay, and you will see all of our education that is in here. Okay, and the videos to short the Hong Kong dollar are in there. And there are step-by-step instructions on how to do that with actually 2 different brokers. And that is just a really cool added bonus, guys, that we do have available for you today. Okay, so this is all in here ready to go for you guys. Okay, so feel free to go ahead and take advantage of that. And so once again, guys, I'm going to play this for you really quick. Okay. And then we're going to look at one more thing, and then we'll go ahead and close out for the day. So this is from Frank A. He's one of our clients that started with Pro. He initially started with, I think it was 200,000. He's now scaled up to about 500, and he's up substantially since he did so. So real quick, I thought this was a kind of a cool analogy. I wanted to play for you guys real quick.
Just a real quick background, like another member who said something the other day, I was a part of a couple other investor groups and had subscribed to Stansberry as well. I still subscribe to Raging Bull, but it's not an investor plan like what Jason and Dean are offering here. It's more just, it's almost like buying a lottery ticket, you know, which is just way too risky, right?
Yeah.
You know, so first I got to say that, you know, after sort of following you guys since the beginning of the pandemic in March and having jumped into a couple other programs, because clearly there's an opportunity, you know, to leverage what's happening in the market, even though there's a lot of bad things happening. When you approach it in an unemotional manner, the way you guys do and the way Jason breaks it down, I mean, to me, it's just absolutely phenomenal. And so the tank thing, I can really wrap my mind around, because you know, who doesn't want to be, you know, driving in a tank with your, you know, life savings in there with all that protection. And I guess when we were talking, Dean, I think I just was like, I was listening to some callers that were a little hesitant, and I've got a pretty significant amount of money invested. I'm not going to say how much, but it's more than 6 figures, put it that way. And, you know, so to step up and pull the trigger and make the investment and have the faith in you guys, you know, it took a lot, especially with, you know, the background that I shared with you earlier, Dean, and maybe another time we'll talk about it. But
Sure.
At any rate, the analogy was, you know, for those that are sitting on the sidelines and hesitant on, you know, putting at least the 25K in there, or even the 1,000 or whatever you might have to just get your foot in the water, was, it's kind of like, all right, the tank analogy is awesome. And the bottom line is, if you can, you know, if you can climb into the tank, you know, which anybody can climb into a tank, right? Which is the same as, you know, anybody can make these orders. I mean, they've laid it out and they lay it out every time. And I've just actually put some more money in and, you know, taking advantage of the down market right now. I'm not trying to time it by any stretch, but, you know, I picked up some more tranches today, just now as we're talking, and with, you know, 100% confidence. And I've only been doing this for about a week. And so, you know, if you can climb a ladder, get in the tank, the only thing you got to really do is watch out so you don't bump your head, right? but other than that, you guys have built a very, in my opinion, safe and sound investment strategy. And, you know, I knew about Ray Dalio, and, you know, so to follow, you know, a plan that he's been implementing, where he's investing billions and billions and billions of dollars. I mean, we're all small potatoes compared to that. So if this strategy is good enough for Ray Dalio, you know, it's absolutely good enough for me. And, you know, I just can't thank, you know, Jason and Dean enough, you know, for what you guys are doing. You know, I mean, the teaching, the training, I mean, I've just never felt more confident in what I'm doing in the market in my whole life than, you know, with what I'm doing with you guys.
It's very cool, guys. That was a testimonial. So we collect these in our live webinars. Okay. And I wanted to play one more for Jeff here. Okay. And these, you know, we gathered Frank's, I want to say 2-3 weeks ago off the top of my head. And then Jeff's was either maybe I think it was last week actually. And yeah, it was last Tuesday. So I'm going to play this really quick.
And I follow, I'll bet I follow still a half a dozen. But what I want you guys to know is what you guys get here is something that not a single service I've found offers. And that is that Jason ties all the news and current events into why he and how he makes his decisions. And if there is, I haven't found it, but there's not another service on the market that offers you what you get here.
Awesome,
So
Jeff.
I just wanted to add that to you. Very good. Have a good day.
Thanks, Jeff. You rock, bud. Have a wonderful day. Enjoy. Okay, guys. So that's just client interaction, right? People wanted to basically jump in, talk about what they're doing, talk about their feelings during our webinar. So pretty cool. And just, you know, these type of comments, guys, really kind of keep us going, right? Kicks us into that, you know, we always going to put in 110%, but you know, the days we get those type of remarks and like Julio today, you know, saying he's over 10 grand and a few months working with us. We love this stuff. And David, you actually heard from earlier today, right? David was in here. He actually was our first verbal question today. Okay. Mark started with us back in January. Made $108,000 in a 2-day span. Okay. Pretty cool. That was actually during the biggest crash of the market too. Just so perfect proof, guys, that we are going to show you how to make money up markets, down markets. Okay. And initially outperform. Okay. Okay. And just really cool, guys. Donald up here, literally no joke, had been in the market for over 60 years. Donald's 83 today. And been in the market for more than 60 years. Wrote me an email the first time that he ever made $100,000 in a single day. And really cool. This is literally during the market crash this year as well. I mean, you hear from Julio, the market's up, you know, he's up 10 grand and over after a few months. So pretty cool, guys. And just absolutely love to, you know, see this interaction. But when you guys can, take a look here. I'm going to go to our pricing page, right? So you guys can see all the different portfolios that we were talking about earlier. So you guys can go ahead and get signed up. Okay. And that link is in the chat box there for you. Okay. And let me just, okay, let me post this into the chat box too, just in case you guys had to step away from your computer because you'll actually lose the message. So give me 1 second, guys. Post that link in there so you guys can go ahead and get set up. Okay. So really, guys, the whole point really, okay, and really what we're aiming for, okay, is a safe return every year. And really, we're going to follow Warren Buffett's #1 and #2 rules when it comes to investing. Okay, we're going to think about rule #1, never lose money. Rule #2, don't forget rule #1. Okay, and that's going to be always, guys, at the core of our philosophy. Okay, but we're going to show you how to be long or short specific asset classes to show you how to make 22% a year. Okay, if you've ever done the math on that, guys, if you leave your money in the market, you are doubling your nest egg. Okay, literally every 3 years. So let's say you're working with $250,000 today. Okay, literally within 3 years at 22%. If you leave it in, compound it, right, reinvest those profits. Okay, at 22% a year, you're going to get to $500,000. Okay, in 3 years. So let's just think if you're 50 today, by 53, you'll go from quarter to half. From 53 to 56, you're going to go over $1 million. 56 to 59, you're going to be to 2 million. 59 to 62, $4 million. Not a bad little nest egg to retire with. 62 to 65, 8, right? 65 to 68, not bad. 16 million, right? You're going to retire with more capital at work than literally 99% of the people on the planet. Okay, so that's our goal, guys. Literally build you guys all into 7-8 figure account investors. Okay, hopefully we'll get a 9-figure in there one day as well. All right, and guys, this is what I'm using with the mass majority of my capital as well. Right, so and one more thing too, guys, our buy and hold advisory, we did up the price last Friday, and then we had a bunch of calls over the weekend, so we did extend it one more week. But guys, make sure to take advantage of the buy and hold advisory today. Okay, so that is something that will go away, but there is still, as of today, there is access to 30 days of boot camp for free. The boot camp is 10 grand, but we'll let you try it out for 30 days at no cost. Okay, and our pro trading advisory. All right, you guys. One cool thing too, we did just give a quarterly option here. Okay, and that's something that's never been available until recently as well. But there is a quarterly option for the pro trading advisory, the annual as well. Okay, and then your options trading bootcamp, if you just wanted to do that by itself, we do recommend it as an add-on program. Okay, and that's part of why we give you 30 days free when you sign up for either the pro or the buy and hold advisory. Okay, and for those of you that need a write-off, or for those of you we've already made, you know, 50, 100, couple $100,000 for, you can always upgrade to the lifetime while we still have the spots available, guys. And that will be something that will go away. We currently have 80 spots available for the lifetime, but once those spots are gone, they are gone forever. So those are your options to start working with us. Okay, and just remember, all of these can be used as a tax write-off, right? So let's just say if you're a business owner, you know, your business has made a couple $100,000, couple million bucks for the year. You need that write-off, right? You want to write down $20,000 in, you know, costs, or, you know, however you want to do it. Or if you have a cash account, you made 100,000 bucks trading this year, you know, you have a $30,000 tax bill coming to you. You can get our help for the rest of your life instead of that. And it's pretty cool, guys. With the financial advisors, you can't write off their fees. Okay. With our programs, because we're technically financial consultants, you can absolutely still use that as a tax write-off. Okay. And then also, guys, if you don't have the right tax structure set up yet in your ecosystem, make sure to click on the link in the chat box here, guys. Connect with our tax strategy lawyers. Okay, we are partnered with the top firm in the United States when it comes to tax structuring. Okay, and you do not, I can't tell you how many people I talk to, they're like, oh no, I have a great CPA. No. You want the CPA counting the beans. You want the lawyer creating the structure and telling the CPA how and why they can count the beans. Okay, not the other way around. So pretty cool, guys. Both those links are in the chat box there for you. So the first one will get you a link to be able to sign up. The second one will connect you with our tax lawyers, okay, to show you how to reduce your liability as an investor. Okay, so thank you, team. Appreciate your time and attention. I'm going to put it on my phone number one more time, guys, and we're going to go ahead and close out here. Okay, so if you haven't texted me yet, 505-322-7515. Look forward to speaking with you guys. And let's see here. Amran, did you have another question before we go ahead and close out, bud? And Rashid, did you have a question? Okay, guys. It looks, and any other, anyone else have a question? Hey, Rashid, did you solve a question, bud? Okay, nope, doesn't look like it. All right, guys, we'll just give me a call if you have any additional questions after the webinar. It's 505-322-7515, or if you want to just send me a text and say, hey, Dean, it's Daniel. Hey, Dean, it's Don. Hey, Dean, it's Amran. Hey, Dean, it's Jules. Hey, Dean, it's Madka. Hey, Dean, it's Mark. Hey, Dean, it's Marcus. Hey, Dean, it's Sobrin, Van, Rashid, Sam. Just feel free, guys. Okay. Okay, cool. Yeah, so Rashid, you're good to go, but just allocate to the portfolios. Specifically, I'm asking any of the trial members, right, if they have any additional questions. I think we got your questions addressed here live, Rashid. So yeah, you're good to go to allocate today, Rashid. Okay, and let's take a look before we close out. Okay, so here's the buy and hold portfolio that I'm using a substantial amount of capital behind. Okay, that's showing $143,000 profit, and that's over the last a little over 2 months. Okay, really to right now, it's 8 trading weeks exactly. We've developed our profit by $143,000 plus. Okay, let's go over and look at my other account here. This is the small account, right? And we just use these for demos. But this is the buy and hold portfolio today, guys, that I structured with the $100,000. Okay, we use that as the structure live. Okay, that's now showing a $1,479 profit literally from when we structured the portfolio roughly an hour ago until right now. Actually, it's an hour and 2 minutes to the dot right here. So not a bad hour and 2 minutes, right? And not to say it's always going to go like that, but that was the results today. So we're going to show it here in real time. All right, guys. So if you haven't yet, send me a text 505-322-7515. Thank you very much, folks. Look forward to working with you. Hope you all have a wonderful day. 505-322-7515. Have a great day.